or on our social media channels. This is Bloomberg.
When you went to Baltimore, you went initially to be an
anchor woman,
and then didn't quite work out.
Yeah, I got fired.
Well,
demoted. I was
got demoted, but they didn't. They had a contract,
yeah.
So they didn't say goodbye.
Yeah.
And then, how did you work out to be on a afternoon show where you actually got to be an interviewer? How did that actually happen?
Well, what happened was this is what I now know with age and perspective, that many times getting demoted is an opportunity for something else to show up, or getting fired. You know, lots of people I've interviewed over the years who have these stories about the best thing that ever happened to you. It puts you in the next best place. I was not a good television reporter. I was too emotional. I was making $22,000 a year, and my best friend Gail, who I met there at the time, she was also working there. She said, "Oh my God, you're 22, making $22,000. Imagine when you're 25." Then you're 30. So I'd be making 60 about now. It'd be good, 62. Once I got demoted, they didn't want to pay out my contract. I was making $25,000 a year. They didn't want to pay me the $25,000.
Right.
So they kept me on and said, "We'll put you on this talk show just to run out your contract."
Bloomberg Surveillance, I'm Rishka Gupta with your Bloomberg Business Flash. PNC has agreed to an $11.6 billion deal that will make it the largest regional bank in the U.S. The lender is buying BBVA's American banking operations. The Spanish bank's U.S. business is focused on mobile banking, but its value took a hit from the coronavirus pandemic. Italian payments processor Nexi has agreed to buy private equity-owned rival Nets. The all-stock deal values the Danish-based company at $9.2 billion. It will extend Nexi's reach across Europe. The firm has operations that include Italy, the German-speaking countries, and the Nordics. And Walmart is retreating from its two-decade attempt to crack Japan's retail market. It's selling most of Japanese retailer Seiyu to KKR and Rakuten in a deal that values the company at $1.6 billion. The buyers will try to shore up Seiyu's digital operations. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Ritika. Now, the market firmly focused on the number of infected and the number of deaths worldwide from COVID-19, but there's a bit of a positive spin after not only do we have positive sentiment because of the massive trade agreement signed by Asian countries, but also signs of opposition to a national American lockdown. I'm looking at dollar. It's falling, and if you look at European shares, they're definitely following these Asian equities higher. What I want to show you, Tom, is not only that what was signed on Sunday between these Asian economies is actually the world's largest regional free trade agreement, and that means that oil is pushing higher, treasuries edging up.
It'll be interesting to say the least. And again, we see this with Pacific Rim and Asia doing better, and all that redounds over to just a better equity market. Let me do percent and level here right now. SPX up 32 points, maybe a high for the day, putting the Standard & Poor's 500 3613. The Dow 29,709 up 300 points. That's a big stick and leading move, 1% move. On VIX, no real pricing yet. It's moving 23.47, but I'd look for that to shape up and come in as well. The summary is simple. Green on the screen, cyclicals lead the way. This is Bloomberg. Tim O'Brien next.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Donald Trump's Twitter feed doesn't make Joe Biden president or not president. The American people did that. What we really want to see this week, Chuck, is the General Services Administration issue that ascertainment so we can start to do the kinds of things you and I talked about a few minutes ago. Meet with these vaccine officials, kind of get the intelligence briefings for the president-elect, the vice president-elect.
Ron Klain there, speaking on Meet the Press, and we thank Meet the Press for that insight from the President-elect's Chief of Staff-elect to be. Right now, and this is really, really important, buried beneath the radar this weekend was a speech by the chairman of the Joint Chiefs of Staff, General Miley, at the U.S. Army Museum. He says, quote, "We are unique among militaries. We do not take an oath to a king or a queen, a tyrant or a dictator. We do not take an oath to an individual." With perspective, Timothy O'Brien of Bloomberg Opinion, our senior columnist, arguably the #1 guy in the world on Mr. Trump's finances, but we'll remove ourselves from that this day and speak of the crisis of this nation. Tim O'Brien, let's just begin with the obvious question. Is it a crisis at General Miley's Pentagon?
It's worth keeping a close eye on the Pentagon, Tom. I think it's easy for all of us right now to fall into the trap of letting President Trump's Twitter feed and movements within the federal bureaucracy amount to either a coup or an unstoppable crisis. But I think the U.S. institutions remain strong. I think General Milley's comments go towards exactly this sentiment that civil servants, the military, and U.S. institutions recognize that there's a transition in place, even if President Trump doesn't. And look, I think there's ways in which the federal bureaucracy can get undermined over the next 65 days. I think there's a lot of ways in which sand can be thrown in the machinery. But Donald Trump will depart on January 20th, and Joe Biden will take over the reins of government.
If he continues with this intransigence into this week, and then we really get into the holiday season, does the judiciary come in, and are they involved in the debate with the president-elect and the president? Away from the voting, away from the balloting, do you anticipate the judiciary will become involved?
Only if cases come in front of the judiciary. And right now, the only avenue I see that happening is all of these challenges to local elections around the United States. And those cases, Tom, they're getting tossed left and right. The bona fides of a lot of those cases are very weak. I would have a hard time seeing any of those having the kind of traction or merit that they'd end up in front of the Supreme Court. So right now, my answer to that would be no.
Tim, good morning from London. How are the Republicans and the Republican Party actually going to deal with President Trump if he continues to not recognize defeat?
Well, I think, Francine, the GOP is still looking at this the way they have for the last 4 years, which is that President Trump has enormous traction in the sort of far right wing of the Republican Party, and he's going to continue to have that traction after he leaves office. He's also a formidable fundraiser. His rallies are evidence of that. That means even after he leaves in January, he's going to be a kingmaker in Republican politics. And I think that has sort of hamstrung Republicans around what the right thing to do here is right now. They should be respecting the process. They should be helping the government move forward, but they're still enthralled to President Trump, and they're reluctant to actually do the right thing. I think it's unfortunate, but it is what it is.
Tim, I know some of the tweets by the president have been a little bit erratic. Could you see President Trump saying actually he's running for re-election, and could he start campaigning as soon as January?
I think yes to both those questions, Francine. I think what you'll see Trump do when he leaves office is he'll either try to start or buy a media company as a competitor to Fox News. I think he understands that a lot of his traction is with the public, is through the media. He thrives on the media. So I think you'll see him do that. And I also obviously think he'll meld that in with political activities. The problem is he may not have as much latitude as he thinks he does. He has financial problems facing him. His company carries quite a bit of debt, a large amount of which he's personally guaranteed. And he also faces 2 very substantial legal investigations in New York. If he winds up with a criminal conviction, he won't be able to run in 2024. I'm not saying he's going to go there, but that's on the table. One of the cases is a criminal investigation. So I think he will continue to campaign. I think he'll be a media presence, but he also has some hurdles to overcome.
Tim O'Brien, you know him extremely well. Your litigation with the president years ago, and of course your acclaimed books. What does the family have to say to the president now?
Well, the family's in it with the president. They've tied their fortunes to him, particularly his eldest children. They're also being investigated in the New York State lawsuits and investigations. They've also have their own financial wherewithal tied to the fate of the company, except for Jared Kushner. So I think they're hip to hip with the president. And I think particularly Donald Trump Jr. sees a future ahead for himself in Republican politics.
Tim O'Brien, thank you so much. Greatly appreciate
Thank you,
it. With
Tyler,
Bloomberg
Francine.
Opinion, just superb leadership of what we're doing in editorial, and also, of course, his work on the president's finances. With our first word news in New York City, here's Ritika Gupta.
Thanks, Tom. President Trump has pulled back from a tacit concession to Joe Biden. On Twitter yesterday, the president wrote, he won because the election was rigged. But later, the president tweeted, quote, he only won in the eyes of the fake news media. I concede nothing. The Trump administration is rushing to install environmental regulations that could complicate Joe Biden's agenda. As soon as today, authorities could advance plans for selling drilling rights in the Arctic National Wildlife Refuge. The administration may also move to lock in existing limits on air pollution and make it tougher to impose new environmental safeguards. The UK is signaling it won't back down as Brexit talks with the European Union enter another crucial week. Officials from both sides say the coming days will be pivotal in trying to reach a trade deal. Two of the most senior officials from the Brexit campaign left Prime Minister Boris Johnson's inner circle last week. The UK's chief negotiator insists he will not be changing his position. And it's a milestone trip for Elon Musk's SpaceX. 4 astronauts are aboard one of the company's capsules on SpaceX's first manned mission to the International Space Station. It's scheduled to arrive there tonight, New York time. SpaceX and Boeing have won contracts from NASA to fly crews to the space station. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine Tom.
Ritika, thank you so much. Now we'll continue to track COVID-19. Coming up, Joshua Sharfstein, Johns Hopkins Bloomberg School of Public Health Vice Dean. We'll talk about the measures put in place. We'll talk about the vaccine. This is Bloomberg.
Better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is Bloomberg Surveillance. Tom Francine from London and New York. This is what the market is focusing on. First, it looks like the Biden advisors don't believe in a national lockdown. That's giving a little bit of a lift to the markets, and there's also some optimism on that trade agreement over in Asia. I'm looking at dollar, it's down a touch, everything else is up, and you can see the VIX a touch elevated, but not that much. Tom?
On the data front, it's real simple. The equities lifted, Francine mentions. Futures up 29, Dow futures up 282. Francine?
Yeah, Tom, one of the biggest M&A deals, and of course it's about Nexi and Nets. We'll have plenty more on that shortly. It was announced this morning, and joining us now is Paolo Bertoluzzi. He's the Nexi chief executive. Mr. Bertoluzzi, thank you for joining us, and congratulations on a really pretty sizable deal in European, in this payment space in Europe. Talk to us a little bit about your main concerns going forward. Is Nexi growing too quickly?
Well, first of all, good morning, and thank you for inviting us and inviting me. Listen, this is a fast-growing business, fast-growing industry that moves very fast. So we don't have the ambition to grow quickly through M&A, but it's actually what is needed to make sure that we build a stronger company over time. And when it comes to M&A, at some point, you need to make things happen when you can make things happen, and this was the case with Nets. We are very happy to combine with another strong company in our sector and creating the largest player for payments in our continent.
Mr. Bertoluzzi, Luzzo, is this your last big deal, and do you worry about antitrust concerns?
Listen, the concept of last doesn't exist in life, I think, in general, especially in business, but definitely we're going to be busy with this deal, combined with the one that we recently announced on SIA. I think the scale of the new company, the breadth of the leadership team will allow us to continue to do, if necessary, if appropriate, smaller things on the side. But again, this is the nature of the industry. As far as antitrust and so on, at the end of the day, this is a European market is evolving very fast. It's more and more one single market. And our company, even if it becomes larger as a combination of these two deals, remains relatively small given the size of the payment market and what this market is becoming.
So once you finish this integration, are there any other geographies where you'd like to get bigger? Is it the US or Asia?
No, listen, I think it's always important to focus on what is closer to you and what makes sense for your customers at the end of the day. And I think Europe will continue to remain our focus for some time. The new group is basically going to be covering from Italy up to the Nordics, going through Germany, Switzerland, Austria, Poland, Southern Eastern Europe, and so on. So if you look at the geographies, clearly the area of focus in the future, not now, will be more, if you like, west of this, but still in Europe, if you think about it, France, Spain, and the like. But again, our focus will be in making sure that we deliver value for our shareholders on this deal, and probably the more M&A that we may be doing in the future is going to be to strengthen further in the geographies where we are in already.
How much more room do you think there is for the payments business to consolidate in Europe? And are we going to see banks actually have to sell off some of these businesses?
Well, there is a trend that has been very, very clear over the last several years that is basically driven by the industrial substance of the payment business. The business is becoming more and more technology-centric, more and more digital, and therefore it requires scale, dedicated capabilities, focus. And this is actually the reason why over time for the banks it's becoming more difficult to focus and invest as much as it is needed to compete in this space. And that's the reason why specialists, large dedicated specialists, if you like, category killer, such as Nexi, come to life and develop. But obviously, depending on the geographies, we continue to work in partnership with the banks. The banks understand that they can focus on their core business and they can work with partners such as us to do the more specialistic work in the space of digital payments. And this trend will continue. So our view is that you will see more and more banks moving from managing everything inside to partnering with players such as Nexi and potentially one day also selling the assets.
Mr. Bertoluzzo, why do you see Adyen having a higher valuation than NexiNets and SIA, despite actually, having lower transaction volumes and EBITDA?
Well, the answer is quite simple. I think when you look at payments is not one industry, but it's a combination of sectors, segments, and so on. And a company like Adyen is focused 100% on the e-commerce and a very large global e-commerce segment. And is one of the segments that is growing the fastest. And Adyen is very good at capturing that opportunity. And therefore, they have growth rates that are actually higher than ours, that are in many cases already in the high single digit for revenues and a double digit for EBITDA.
Give me a sense of some of the stiff competition that you had to face in trying to get nets because you were competing with some of US peers, including Global Payments.
Well, listen, we never saw it as a competition in the sense that, especially when you have next to you players that are larger, like the US ones, you need to decide what is your positioning. And our positioning has been very, very clear since the very beginning. We said, listen, now, if we said to the shareholders and the management team of Nets, if you guys want to take cash and run, it's not going to be us. Someone else will always be ready to pay a bigger check. If instead you're interested in combining the two companies and growing a European champion in our industry together, and therefore continue your industrial project, we are the ones, because that's what we want to do, and we are happy to do a deal as we did it. This is a merger. It's an all-share deal without adding further debt to the company. It's a completely different logic from alternatives that were probably on the table.
I mean, the way we shop has completely changed because of the pandemic. What does that mean for the payment system post-COVID?
Well, listen, the payment system is putting aside e-commerce and a few other segments is suffering with the rest of the economy through the pandemic, even if our assets, Net's assets, are quite resilient to this. I think, as for many other digital services, the pandemic is pushing people to understand and experience how much better it is to pay digital versus paying cash. And therefore, we are seeing an acceleration in the shift of behaviors of people from cash to digital. It was already happening. This is structural. It's happening everywhere in the world and in our geographies as well. But clearly, in this phase, we see an acceleration, both on the consumer side and the merchant side as well.
Paolo Bertoluzzo, thank you so much for joining us. He is, of course, the Nexi chief executive with this mega deal being announced this morning. Now, later today, Dr. Celine Gunder, the Biden COVID task force member and NYU School of Medicine assistant professor, joins us. She'll, of course, be talking about the pandemic, COVID-19, track and trace, and the vaccine. That's at 12:30 p.m. in New York, 5:30 p.m. in London, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Talks are underway inside Nissan that could fundamentally reshape the world's biggest car alliance. Bloomberg's learned the Japanese car maker is exploring ways to sell some of or all of its 34% stake in Mitsubishi. A sale may be the first step in a broader review of the three-way alliance that also includes Renault. The world's biggest oil company, Saudi Aramco, is returning to the bond market for the first time since April of last year. It's turning to debt to help fund a $75 billion dividend commitment. Slumping crude prices caused Aramco's profit to fall 45% in the third quarter. And that is your latest Bloomberg Business Flash, Francine.
Rutika, thank you so much. Now, cosmetics giant L'Oréal sees a makeup revival after the pandemic. The chief executive, Jean-Paul Agon, told Bloomberg that even though e-commerce has gained traction during the crisis, the market will not completely move away from brick-and-mortar stores.
I think that, as you've seen, we were already back to growth on the third quarter. The market is still negative, so we are doing better than the market, but the market should recover. You know, there is a very strong appetite everywhere in the world for beauty products. And in fact, as I explained several times, the crisis that we had this year is not really a demand crisis as we used to have in the past, in other crises, but it's more a supply crisis because consumers couldn't buy the products. So we are back, for example, in Europe, back to lockdown, but now e-commerce is getting traction. And I think that when, because there will be a when, the virus is gone, I think that we will be back to a very good consumption. The appetite for beauty is absolutely still there, more than ever.
Your chief digital officer recently talked about e-commerce. As you say, you see a lot of demand in there. And they were talking about the fact that it's your biggest market now. All of this clearly fueled by the pandemic. Will it ever be 100% and we see an ease up or a phase out of brick and mortar retail stores?
No, I don't think so. I think that it's a new option for consumers, and consumers are switching. Part of consumers are switching every year more from brick and mortar to e-commerce. Of course, it was accelerated this year. It was already going very fast before. You know, I remind you that last year, for example, our e-commerce sales were growing by 50%, which is already very fast. So this year, of course, it grew even faster because when the stores were closed, of course, there was an acceleration. And it represents now 25% of our sales. So it's going to keep growing, but consumers will always want to have the opportunity also to see products in stores. And so I'm a great believer in what Jack Ma described a few years ago already as the O+O, which means offline plus online, as two options and also a combination of options.
What are you currently seeing, given the fact that Europe is dealing with the second wave? France is in lockdown, the UK is in lockdown. How has that affected your business?
It doesn't help, of course. It doesn't help. I'm really sorry for our partners, our salon, for example, professional salon partners, perfumeries, department stores. It's really difficult for them. So we help them as much as we can. You know, during the first lockdown, we froze the payments of all our small customers, no more than 100,000 salons and small perfumeries, and we accelerated payments to our suppliers. So we are doing the same. We try to help our ecosystem. And of course, it doesn't help consumption, but I hope it's not going to last too long. And consumers also, I think, are more now aware of other options. They go on e-commerce, they find solutions, but of course it doesn't help. It should not last too long.
That was the L'Oréal Chief Executive Jean-Paul Agon speaking to our Anne-Marie Horder on the makeup industry revival. Tom would have a thing or two to say about Glossier and eyebrows and things like that. Now, this is where the data is. U.S. equity futures rising along European stocks. The focus, of course, signs of an opposition to a national American lockdown, but also positive sentiment on trade. The dollar falling this week. Today, Bloomberg New Economy Forum. It kicks off with a great panel on the economy. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They move the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
seen a massive momentum shift in the last week that we don't think investors should be ignoring.
Fiscal stimulus is necessary in some form. The sooner the better.
The vaccine is really the game changer here to bring us back to normalcy.
In the months ahead, we will see perhaps less volatility than we've seen so far this year.
The market in the next 2 months seriously will start to reprice everything.
Growth will pick up a lot in the second half of next year as people get back to normal.
We've been in a bull market. We remain in a bull market. If anything, patterns are just magnified.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. More record highs in this equity market worldwide. In the United States, we advance on the S&P 500. Lisa Abramowitz, we've got to begin with some breaking news.
Yeah, Moderna's vaccine information, it came out. They've done a study of 30,000 individuals in their trial, and 94.5% efficacy rate is the headline. The idea that this actually shows a higher efficacy rate than what we saw from Pfizer last week. And the other aspect of this that is really getting a lot of people excited is that this vaccine is shown to be much more stable for longer at refrigerated temperatures. If you remember last week, people were talking about Pfizer and how it had to be kept at ultra cold temperatures until a couple days before it was distributed. This one has a 30-day shelf life at basic refrigeration. Now, John, I think that there's going to be key. This is only 30,000 individuals. It showed that only 5 showed symptoms once they got 2 shots of the vaccine versus 90 individuals who got sick when they got the placebo. John, very promising, and we're seeing a reaction in markets.
So, Lisa, they are the headlines. Let's plug them into the financial markets. There's the pop on Moderna. I want to get to futures, equity futures in the United States, on the S&P 500, on the NASDAQ, and on the Russell as well. We have a lift in this equity market. We fade the NASDAQ. We're familiar with this. We roll up on Russell futures, up by a little more than 2%, up 2.35%. A record high at the close on Friday on the Russell and the S&P as well, and we advance once again. Tom, I want to check it on the bond market. Yields higher, curve steeper. That was the theme when we got the Pfizer news last week. That's what we see right here again. Switch up the board. Bonds lower, yields higher, up 2-3 basis points on 10s. On 30s, we advance another 3 basis points to 168. So, Tom Keene, in the space of 1 week, improving news on the vaccine front from Pfizer and now Moderna as well, at a time when infections in the United States, we've posted an extra 1 million in just 6 days.
Well, I've got 2 wonderful guests on this. We'll go to markets here in a moment, John, and Sam Fazili will give us wisdom here on the pharmacology of messenger RNA. But, John, my wisdom is the Dow almost printing 30,000 on futures. We did that on November 9th with Pfizer, and we do it again. We're not there. 29,998 this morning. And, John, real message here, correlated across markets.
This is the story that has just dominated the conversation on this program over the last week. The near-term outlook is getting darker. That's the story in the United States.
No question.
On the horizon.
Yeah.
Just a little bit of optimism, once again from Pfizer and now from Moderna as well. We've got to get to the expert this morning. Sam Fazeli of Bloomberg Intelligence joins us now. Sam, let's just start here. You've had a couple of minutes to pour through the numbers. Can you compare what we've learned from Moderna this morning and contrast that with what we learned from Pfizer last week?
Yes, good morning, John. Can I just first say that this is I was a little bit, well, I'm kind of speechless to a degree. At this level of efficacy, I was really getting ready for a 70-80%, because there are differences between these vaccines. 94.5%. I'm not going to call this better than Pfizer, because this is, we're dealing with such few cases. But thank God it's higher than that number rather than below it. And we get more from these guys. We're getting more with regards to the statistics. You see that p-value they put in there, which is pretty powerful, which is not a surprise. We're also hearing that the 11 severe cases so far were all on placebo when you read further down. That's great. And if that carries on being the case, we'll be very happy. And lastly, they do tell us that 15 people in the trial, in the 95 cases, were older adults. But it doesn't tell us which groups they were in, the vaccinated or the placebo. So that's one little thing that we'd love to know.
Sam, the 23-mile difference from Moderna in Cambridge out to Andover in Pfizer's refrigerators is a difference between negative 94 degrees and, as Lisa mentioned, the refrigeration headlines. Are all of a sudden messenger RNA, is it all of a sudden more distributable worldwide simply because of the freezing to refrigeration path?
Yes, Tom. I mean, that's pretty much as simple as it gets. The question for that press release that first came out from Moderna is actually incremental. We knew already that the storage and distribution was at -20. We knew that it was okay to keep it in the fridge at the 2 to 8 degrees for a certain period of time. They've just extended that, and we're going to get more as time goes by about how long these things can be kept. And it just makes the use of the vaccine easier at the end of the line. And of course, it's already an easier vaccine to distribute than Pfizer.
I mean, this is important, Lisa. Right now, we're confusing everyone because I refuse to quote Celsius and Dr. Fuseli refuses to quote Fahrenheit. It's clear, isn't it, Lisa?
Yeah, well, it makes it a lot easier to get the Moderna vaccine out and distributed if you don't have to have some cold ice on that side here. I am wondering whether we can take a 30,000 person study where we're talking about sample sizes of 5 people or 11 people, Sam, and extrapolate that out into something that can really immunize an entire world population. Is this sufficient in your eyes?
Yeah, well, it's a start, and I think this is what I've been saying with regards to the Pfizer already. These are not the levels of effectiveness that we expected at this point. Everyone was psychologically, mentally preparing themselves for 50, 60, 70%, which would have been good. But this is levels that nobody expected. So again, as I say, we've taken the first step, we've thrown the first set of dice, and we got 2 6s. It's a great, great start.
Sam, just a final question from me, just to wrap things up. Is there a difference in providing this information in a press release compared to a peer-reviewed journal? Can you compare and contrast that? Just that approach and how this information is being distributed into the public?
Yes, the absolute level. I mean, you have to give it out because it takes time to prepare these documents to get them published. You need to know how well the two groups were balanced. If there were lots of people with comorbidities in the placebo group, which therefore didn't respond to the vaccine as well. I doubt that's the case because these are already large numbers, but you do need to see that.
Sam, great to catch up, as always. Sam Fuseli there of Bloomberg Intelligence on that breaking news. If you're just tuning in for our audience worldwide on Bloomberg TV and radio, Moderna giving us an update on some of the data from their vaccine trials. The coronavirus vaccine found to be 94.5% effective in their analysis. This is the price action off the back of that headline. Moderna to the moon, up about 10% in pre-market trading. Equity futures is where the story is that we've been grappling with over the last week. That rotation, we have a little bit more fuel for it. The Nasdaq rolls over, the Russell, the small caps, rolls up. The S&P 500, a record high at the close on Friday, was set to add some weight to that as we count you down to the opening bell. Joining us now, I'm pleased to say, is Ben Laidler, Tower Hudson Research CEO. Ben, the story really over the last week hasn't changed. It's the short-term risk, the long-term opportunity. Does the news this morning help us become just a little bit more tolerant of some of the negative stories we've heard across America over the weekend?
Absolutely. I mean, it gives you more visibility, I think, on where we're going. I think it accelerates this sort of rotation into cyclicals and maybe value that the market has sort of been trying to make, but has lacked the sort of courage to make that leap. And I think you're now absolutely getting that. We've had this sort of double catalyst of we're now through the election and we can sort of face forward into what I think is going to be a very big 2021 sort of growth rebound. And the vaccine or the incremental vaccine news, I think we've got a lot more still to come here. Helps us sort of bridge that gap, if you like, over the sort of winter infection spike to a gradual sort of renormalization of activity and the way to play out these sort of cyclical stocks, which is where I think we're massively underestimating the sort of operating leverage.
Ben, you have been way out front on this. What we have is a distributed base with maybe some catharsis, of course, in March or April. What's your percentage up visibility out 12 months, out 24 months, out 36 months? How big is the Laidler leap?
Listen, I think it's huge. I mean, just to give you, so if you like the sort of tip of this, right? If I look at those sort of reopening stocks, the ones that have been sort of most impacted by this, even with all the rally over the last couple of weeks, I mean, they've still underperformed this sort of market darling sort of work from home stocks by over 80 percentage points. They're nearly 4 times price to book cheaper. They're not making any money. There's been where all the biggest surprises in third quarter earnings have come from on the sort of positive side, and revenues are still down between 30 to over 100%. So, that's your sort of order of magnitude. I think this rotation has sort of barely, it's frankly barely getting started. And the other thing I would say is, the other sort of fuel on this fire is investor positioning. And we've been saying for a while how cautious it's been, but just in the last week, you've seen it begin to turn and actually turn quite dramatically. And that, I think, is, the fuel that's going to come into the market here.
So, Ben, what on a day like today are you actually buying or doing? I mean, there is this feeling that long term it's going to be a good scenario. Short term, still a lot of volatility. Are you active on a day like today?
Listen, if your average investor is not carrying anything like as much risk, I think, as they should be right now. We're overweight small cap, we're overweight industrials, we're overweight real estate, consumer durables. We're not overweight all cyclicals or even all value. I think this is much more a cyclical story, really, than a sort of value story. I'd make a small distinction there. But yes, I'd be focusing on where are you getting the most operating leverage to the sort of fear of the virus beginning to moderate over the next few months. And again, I think it's, in these small caps, industrials and real estate particularly.
And it takes you outside the United States, I imagine, as well, Ben. If you really want to get that high leverage play on the reopening of a vaccine, it's got to take you to Europe, which has been beaten up so badly. And it has that mechanical, that composition towards the names, the themes that you're talking about. Ben, can you walk me through your Europe call right now?
Europe and I would also say the sort of cyclical bit of emerging markets. So domestic cyclicals in Europe, for us, that's sort of financials. It's pretty much the cheapest, most hated, and one of the larger sort of sectors in Europe where, we're overweight there. But also within EM, right? I mean, everybody, including us, has been sort of hiding out in China and North Asia, first in, first out. But, the rest of EM is really your much more cyclical bit of EM, very similar to this sort of, US reopening story, very depressed earnings and a lot of operating leverage. I guess the one caveat just on Europe is just watch the dollar and the flip side of that, the strength of the euro. A lot of these European corporates, sort of very, very global, very international. So, to the extent we get, too much of a euro move, that's definitely a headwind. But yes, broadly Europe, much cheaper, much more depressed earnings, and just seeing a lot more operating leverage here.
Ben, great to catch up, as always. Ben Laidler there of Tower Hudson Research. Thank you, sir. Thank you very much. We start another Monday morning with some good news for you worldwide. This time it comes from Moderna. The coronavirus vaccine they're developing is found to be 94.5% effective in analysis. Tom Keene, some encouraging signs around the storage of that vaccine as well. And this market, Tom, off to the races before the news, off to the races after it too.
Yeah, I'm going to set it just below the enthusiasm. I mean just below the enthusiasm that we saw with the Pfizer lift. And John, that may change. I'm looking at Dow. I know John looks at Standard & Poor's 500. I look at Dow. We're not on speaking terms on that. Get over it, folks. Dow up 1.9%. SPX 1 point. What's the VIX going to do, John? We're going to get a 22, dare I say, a 21 VIX?
I think it's fair to say we're from different generations. We can agree, we imagine, that the VIX is going to go a little bit lower on this news, Tom. NASDAQ, that's the story, though, we should sit on just for a moment. We fade there, Tom.
Yes.
We're pretty much unchanged on the session. It's that tug of war still, Lisa Brambitz. How many times did we have that chat last week? The tug of war between the near-term risk, the long-term opportunity, the tug of war between big tech and small-cap value.
Yeah, and a lot of people are going to be asking the question, will the big tech names, will NASDAQ continue to underperform, or will it actually lose value? And really, John, what I'm looking at right now is the yield story. Yields are actually, yes, they are shooting higher, but not by as much as you may expect. You don't necessarily see people start to worry about what happens when yields go up dramatically, which matters for big tech because that's been a rate play. Basically, if yields are so low, then big tech is worth it at these high valuations. Big questions.
97 basis points was the top end of the range last week. That's the number to watch this morning. Coming up on this program, Dr. Robert Murphy, Northwestern University professor of infectious diseases. That's coming up next right here on Bloomberg. Heard on Bloomberg Radio, seen on Bloomberg TV. For our audience worldwide, this is Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. There's word that another vaccine has been found to be highly effective at preventing the coronavirus. This time, it's Moderna that's out with details of a late-stage trial. The drug maker says its vaccine has 94.5% efficacy. Results also suggest the vaccine may block severe cases. The report comes a week after a similar vaccine developed by Pfizer and BioNTech was found to be more than 90% effective. President-elect Joe Biden's top coronavirus advisors say a national lockdown isn't on the agenda. One of them, former Surgeon General Vivek Murthy, he says the preferred approach to fighting it is, quote, a dial that we turn up and down depending on severity. U.S. case records have hit records over the past 2 weeks. Boris Johnson's attempt to get his premiership back on track has stumbled before it even began. The British Prime Minister is being forced to self-isolate after meeting a lawmaker who tested positive for the coronavirus. Johnson had hoped to regain control of the national agenda following a chaotic turf war in Downing Street. And President Trump could potentially tie the hands of Joe Biden when it comes to China. Bloomberg has learned the president plans several new hardline moves against Beijing in the remaining weeks of his term. The National Security Council says future presidents will find it politically suicidal to reverse what it calls President Trump's historic actions. And in sports, Dustin Johnson made history while winning his first Masters tournament. The world's top-ranked golfer shot a record 20 under par to win by 5 shots. It was the largest margin of victory at the Masters in 23 years. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We get the overwhelming majority of people taking the vaccine, and you have on the one hand an effective vaccine, on the other hand a high degree of uptake of the vaccine, we could start getting things back to relative normal as we get into the second and third quarter of the year, where people can start thinking about doing things that were too dangerous just months ago.
That's the optimism from Dr. Anthony Fauci there. From London and New York this morning, good morning. Plenty of optimism in this market right now. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's the price action a couple of hours out from the opening bell. We shape up as follows. On the S&P 500, we advance. You get a bigger bid on the small caps in America. The Russell getting another lift. In the FX market, a euro just slightly positive. No big moves here. Euro dollar 118.44. Lisa talking about that muted response in treasuries. Yes, we are lower. Yes, yields are higher. But it's a muted response, up just 3 basis points on a 10-year to 0.9275%. This off the back of the headline from Moderna that their coronavirus vaccine was found to be 94.5% effective in analysis. This time last week we were talking about Pfizer. That number was 90%. Tom, we're trading on the good news. We are not trading on the fact that the US recorded more than 1 million COVID-19 cases in the last 6 days. We're not trading on the fact that Governor Whitmer of Michigan came out with new restrictions. We're not trading on the fact that Governor Inslee of Washington came out with new restrictions. It's not about the short-term story right now for this market. It's about the back end of 2021. That was the story last week. That's the story this morning too.
Pandemic news is grim. Not only that, but also in South Korea, and I should point out continental Europe as well. Right now we're going to do what Lisa, John, and I feel is really important. Yes, we do the markets, we do economics, we do the politics, the international relations, but you need to understand the science of what we're talking about. Robert Murphy is acclaimed at Northwestern University in infectious diseases, and one time, long ago and far away, went through Leninger's biochemistry. Dr. Murphy, good morning. I want you to explain in a King's English how messenger RNA goes into the cell, comes out to the cytoplasm, and kills this virus. Are we assured that can happen?
Well, apparently so. You've got 2 messenger RNA vaccines that have been put out there in tens of thousands of people. This is not a small number of people. I think the Pfizer one was like over 40,000 people and the Moderna 30,000. A lot of people have taken this vaccine. And we would have been happy if 50 or 60% of them were protected from getting it. And they're 90 and 94.5%. This is really way beyond expectations.
It is original in mRNA research as well. Explain to our audience what will be different in this distribution versus a polio vaccine, a flu vaccine, or more bacterial shots as well.
Well, it's a vaccine, just like the other ones that you mentioned. Messenger RNA is a very small protein, and it's fragile. And so it has to be kept cold. And the difference between the Pfizer and the Moderna is how cold does it have to keep? The Pfizer one has to be kept at minus 70 Celsius or minus 90 Fahrenheit, very cold. It's doable, believe me, it can be done. But that is going to be a challenge in the whole cold chain supply. The Moderna one has to be kept cold, but then when it gets out into the market, it can be up to basically just above freezing. So it's going to be a little bit easier to move that around. But either one of them, it can happen. And we're probably going to need both.
Dr. Murphy, I'm going to go home today and talk with my 8-year-old and 11-year-old son and tell them there is a vaccine, another efficacy study coming out, and they're going to say, when's the pandemic going to be over? What's the answer based on the distribution models that you've seen?
A year from now.
Really?
Yeah.
A full year. So walk us through what happens over the next year.
So what happens is, so these companies have to submit their EUA, emergency use authorization. You know, the data will be gone over by an external advisory board, and they're going to make sure that it's safe, and they're going to continue to follow those patients that are in the study. Then the vaccines will be available probably the end of December, most likely. Now, there'll be maybe 20 million doses from each one of the companies, and they'll get out there, and then it's who's going to get those first 20 million doses. You know, right now there's a lot of reluctance in the world to take it. They think this is going too fast. There's a lot of people that are against vaccines. But I think once the data is out there, and if it's as good as it sounds, and it's verified independently, people are going to be lining up for this thing. So they'll start pushing the vaccine out, and it's going to come out in to different populations, people on the front lines, people with high risk for severe complications, diabetics, older people, people with underlying cancer, for instance. The higher risk people will get it first. And then I would think that by the second quarter of next year, there'll be enough companies out with the vaccines that it'll start really penetrating into the general population, and then basically just go line up and get it.
For our audience worldwide, if you're just tuning in on Bloomberg TV and radio, we're with Dr. Robert Murphy of Northwestern University off the back of some news from Moderna that the coronavirus vaccine was found to be 94.5% effective in analysis. Doctor, just give me a moment. I want to turn to the price action just for a moment and have a look at what's happening in the United States. Equity futures are picking up here with a bid on the small caps. The Russell up by 2.64%. We advanced 46 points. Tom, for our audience right now, we're grappling with the same question we grappled with last week. How much bad news can this market ignore in the short term on the hope that the long term looks better? And my question would be, can you really untangle and draw a hard distinction between those two stories? Short term, not great, long term, better. And doesn't the short term, to some degree, shape what the future looks like in this economy?
There's always a balance of that, John. Notice the red on the screen for the NASDAQ 100, where this is a rotation. And I would point out, John, as you go back to Dr. Murphy in Chicago, I would point out, John, very importantly, that the rebound in value, cyclicals, mid-caps, and the rest of them isn't even back to the previous regression. Yeah, we came up off Pfizer. Yeah, we came up off Moderna, but we're not even back to trend. They were so discounted.
Doctor, I'd just like to finish with a final question on the price of a potential vaccine. These are private companies. Some of them have worked with the government. Any idea on how much this might cost for governments to provide the general public with a vaccine like this?
Well, the U.S. government has already purchased hundreds of millions of doses. It's already paid for. It's going to go out there free. So what it actually costs, I don't know. It's anyone's guess.
Doctor, great to catch up this morning. We appreciate your time, sir. Thank you. Dr. Robert Murphy there of Northwestern University. Tom, big question coming into the development of this vaccine is how much they would charge for this vaccine, especially for the companies that worked alongside the government and took funding from the government as well. There will be huge pressure for whoever comes up with a vaccine. And good news is that we have two companies in the last week that are showing some real success. The more companies we have, Tom, the much better it could be.
Well, you got to believe the taxpayer is going to pick it up in a lot of different countries. As Peter Hotez of Baylor says, what about the poor countries. I haven't seen a real treatise yet, John, on how Pfizer and Moderna, as expensive mRNA-style medicines, translate over to India and other poor countries. But that'll be a debate for another moment. This is a celebration, John, of that percentage number the pros are talking about, like Dr. Facili and Dr. Murphy. It's a statement on the delivery efficacy for going from very cold to refrigerated temperatures, and it's also a statement on confidence. There are two of them, John. What are we going to do when there's three of them?
Well, let's hope there's three. Let's hope there's four. Let's hope there's five. And let's hope the numbers get better and better. And so far they are. Last week, the number everyone talked about was 90%. Lisa Abramovich this morning, the number everybody's talking about is 94.5%.
Yeah, and we can all start to imagine perhaps a world where we're not necessarily wearing masks and socially distancing, and we're getting on airplanes without having our noses swabbed ahead of time, like United is beginning overnight here into Heathrow. I have to wonder, though, your question about near-term versus long-term. There is a question, can we ameliorate some of the pain in the near term with the hope, with the promise, with the investments by companies in a longer term without masks?
This is the market that shapes up as follows this Monday morning. Good morning to you all worldwide. We advance on the S&P 500. We roll over on the NASDAQ. And the small caps, after a huge rally last week, we had some weight to it with the Russell up by 2.5%. Tom Keene in the bond market, Lisa talked about it. The move is muted. We're up just a couple of basis points. Last week, the high end of the range, 97. This morning, 92 basis points.
The real yield comes in, too, from the gloom of negative 1.00% to a negative 0.84%. Another metric, John, within fixed income.
Coming up on this program a little bit later on Bloomberg TV and I imagine on Bloomberg Radio as well. We'll be catching up at 10 a.m. New York time, 3 p.m. in London with the Moderna CEO.
Better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. Here's the price action this Monday morning. Better news from Pfizer last week. Better news from Moderna this week. What does it mean? It's that spread between the S&P and the NASDAQ that opens up again. But the more pronounced move is between the NASDAQ and the small caps. Last week, the NASDAQ negative, the small caps up more than 6% on the week. Similar story this morning. NASDAQ futures negative. Russell futures positive by a little more than 2%. That's the stock story. Here's the bond story. This is the key to this move. The bond market holds the key to this move. To get that sustainable rotation, you need yields to break out just a little bit more than this. Up 2 basis points on 10s. Last Wednesday, we topped out at 97 basis points. The spread opening up, nowhere near where we were last Wednesday. Almost 80 basis points, the difference between 2s and 10s. And that's what we've got to watch today. How much of a move do you need to see in this bond market to support a continued durable move in that equity market? Final board, final screen. Quick look at the FX market. That cyclical impulse returns. Do you get a move in a euro? Not really. Euro dollar 118.36. You get a move in the Aussie, the commodity currencies, all that good stuff. Tom Keene, we talked about this last week. I imagine we'll talk about it through the next couple of days. What is going on with the euro, the single currency? And why aren't you getting the big move in the euro when you get that big move in the equity market on the continent?
118.35. And actually, euro against yen has been stronger, looking at the dynamics, the churn of yen as well. Right now, Christopher Harvey joins us with Wells Fargo here on equity strategy. And his research note goes to the heart of the matter, which is the wall of cash that's out there. Chris, you talk about the sloshing of cash out there. What will be the incentive for the sloshing to get into the equity market? They're comfortable, aren't they, being safe?
Well, there is a lot of sloshing going on right now. And what's going to get that in the market? We're already beginning to see people put money to work. But on the corporation side, what I think is going to happen is slowly but surely, you're going to see more M&A activity. You're going to see more CapEx activity as the news that we have in and around vaccines starts to improve. People have been in a bunker mentality, and finally they're getting some good news. And finally they're saying, okay, we can start to discount what's happening in the future. We can start to think about good things. We can start thinking about CapEx and other growth plans and even M&A.
So I just want to repeat sloshing over and over again. And frankly, I want to hear Tom Keene repeat sloshing over and over again. But let's move on. I do want to talk about the nature of this rotation. A lot of people putting increasing faith in this rotation into cyclicals, the rotation into financials, especially with a steepening yield curve, and a rotation out of big tech and the NASDAQ. What is the nature of that? Is it underperformance? Is it losses on big tech? How long lasting is it? What are you seeing?
So, Lisa, we've been talking about this for some time. If you look at first half comps for a lot of the financials, more economically driven stocks, very easy. For your tech companies, not so much. But more importantly, what I think has happened recently, especially with the financials, you have two real catalysts here. You have the yield curve steepening, which is what it typically does after inversion. And two, you're getting really positive news, the news that we had expected on the vaccine front. And now we can start looking through things. And let's not forget, many consumers are in a very good spot. Getting back to sloshing and to cash, there's a ton of cash on the consumer's balance sheet. And there's a lot of pent-up demand. This is a very different mentality, and this is a very different situation post-recession than we've seen in the past. People have money, and they want to spend, and they can spend, and I think they're going to.
That's the line from Morgan Stanley this morning. Quote, keep the faith, trust the recovery. You talk about looking through things, Chris. Can you help me understand what would test that faith in this market? There is a widely held assumption that stocks will just go up. the conversation we have on programs like this every single day is which part of the equity market will go higher. Do you have any idea what kind of conditions we would need to see an equity market finish next year in negative territory?
John, that's a great question. So we get a lot of questions, a lot of thoughts and comments around that rotation. Does big tech really underperform? Does it become a massive source of funds? And do small caps put up double-digit returns and tech put up negative returns? And that's possible, but our base case is more along the lines of you're going to get mid-single-digit returns for your broader market, and you're going to get double-digit returns for your cyclicals and your small cap. How do we get to negative returns for the market? Again, it's a long time. It's a long 12 months. We still don't know whether the GOP is going to control the Senate. If the GOP doesn't control the Senate, we may be looking at higher taxes. And if we are, that's your answer.
So that's the politics. Might have to wait until January to work all that out, Chris. One thing we do know right now is the trajectory of the virus in the United States is terrible. 6 days, 1 million new COVID cases. Over the weekend, Michigan, Washington, the two governors, more restrictions. Are we willing to look through more of that, maybe even a repeat of the kind of lockdowns that we saw in March? Are we comfortable looking through that too?
Right. So you said we, and it really depends on who that we is. On an individual basis, I know for myself, and we talked about this before, my son is still doing virtual, right? He's still going to continue to do virtual. But if we, as a stock market, yes, I think we can look forward to it. We can look through it, excuse me. And I think we're going to see that rotation. But yes, there's going to be a tug of war between COVID cases and whether we have better news on vaccines and so on and so forth. And one of the things I do worry about, and getting back to the negative, is you may see a pretty healthy, especially on the white collar side, a tick up in unemployment. And so there's a lot to worry about. This is by far, we're not out of the woods by any stretch of imagination. And there's a lot of things to keep your eye on.
Chris Harvey, what's your response to the absolute or relative return of big tech? I mean, what does it do versus the cyclical recovery? Is it going to participate, or is it dead on arrival through the year?
Yeah, Tom, I think what it does, it's a source of funds. And some of the things that we're seeing over the last couple of days, the last couple of weeks, I think is what you're going to see longer term. When you have those big rotations, I think tech will be flat to possibly down. This feels a lot, in some regards, it feels a lot like the late 90s, where you have these massive returns from growth and from tech. But the difference is the underlying fundamentals and underlying valuations are nowhere near where they were back in 99. So these are not what we would call shorts, but on a relative return basis, we really do want to rotate into those cyclicals, those smaller caps, those higher COVID beta plays.
Do you want to rotate into the banks?
We do. For the first time last week, we started pounding the table on the banks. Banks, historic valuation, underperformance for years on end. If I said they had bad sentiment, that's a step up from what they actually do have. And again, getting back to those two catalysts, yield curve steepening and vaccines in the marketplace. These are really high COVID beta plays, and we think now is the time to do it in the capital markets.
Chris, 3 months ago, everyone was talking about fiscal support. 2 months ago, fiscal support. It was really important and necessary. All of a sudden now, it doesn't seem to be on the table. We don't necessarily expect anything through the end of the year with the lame duck session, and then there's the questions about the composition of Congress to come next year. Does the success of the vaccine trials that we're seeing now reduce the emphasis on fiscal support, and how does that translate into your stock call?
Right. So, Lisa, again, it gets back to politics. We still have to wait for the results out of Georgia. We'll have those results in early January. If we have a GOP Senate or a GOP-controlled Senate, they've always wanted to pass something skinny, and maybe this gives them even more. Maybe that makes them put their feet in the mud a little bit further, and they don't want to pass anything. If we do get a Democratic Senate, I think we do get stimulus. Our opinion, we never thought stimulus was going to get done before the election, and we don't know. We're not entirely sure that we really need stimulus at this point in time. Parts of the market, I think we do, but we don't. I don't think we need a ton.
Chris, great to catch up. Chris Harvey of Wells Fargo Securities. Thank you, sir. This market advances. Chris mentioned the banks. Tom, you brought up the banks. JP Morgan and pre-market up 3.5%. We had a little bit more to that rally as well. The small caps, the financials. Energy last week just had a massive week, Tom. You and I and Lisa, we asked that question, what is durable, what's just a short squeeze? I think we've got to continue asking that as we look at another catch-up trade through this morning.
I mean, I'm looking at XOY. When was the last time I looked at XOY as an energy proxy? And it's off the trend. But, John, I really want to make clear that the distance here of the vectors of big tech versus these on-the-bottom cyclicals into energy, as you mentioned, is substantial. J.P. Morgan not through the highs seen on November 9th with Pfizer.
Do you know anyone that thinks stocks go down next year, Tom? Do you know anyone that thinks the next 3 months matters?
That is a brilliant, it's the smartest thing you've said since that comment on Arsenal over that beverage this weekend. John, I really think that's an important idea, that there's really no one out there talking VIX 28, VIX 30.
Well, Lisa, the numbers over the weekend in America, the COVID figures are terrible. When I said we earlier, what are we willing to tolerate? I'm talking about Chris Harvey and his friends who call the equity market. I'm certainly not talking about the average person on the street right now who potentially faces more restrictions in the United States and beyond. Really difficult few months. And I'm not trying to put a downer on any of this. I'm just trying to work out, are we really sitting here and saying that we can take a brutal 3 months and substitute in a better back half of 21 with a vaccine and just ignore all the bad news for the next 3 months into year end?
Yes, that is what at least a lot of equity strategists and investors who come on this show have been saying, right? Ignore it for the long-term view. I do think, though, that you raise a really important point, and this goes to scarring, right? And Chris Harvey was talking about how he expects white-collar unemployment rates to go up, to tick up higher as some of these companies pare back their staff, reduce costs to hunker down during this period. How much of an effect does that have longer term? People talk about not necessarily a big need for more fiscal support. It's because you've got the consumer that's flush with cash, paid down debts. How long can they sustain that without an additional round of fiscal support? These are the questions that become that much more pressing as the virus continues. Frankly, we can't go out to eat in the same kind of way. We can't get on airplanes. You're still in London. Are you going to take that transatlantic flight on United? Or they swab your nose?
Surveillance Gulf Stream.
I was never a United kind of guy. Plenty of other airlines out there that you can use besides United.
Wow.
It's not me throwing mud at United. I'm just saying there are other airlines that everyone can use. I would point out, John,
Dr. Alarian is devoted to his United Airlines.
He is. I mean, Mr. Alarian is very devoted to United, as he often tells us. I believe there's a snack that comes on United Airlines, Tom. It's like this small little waffle thing with caramel in.
Mm-hmm. It's good.
Stroop waffle? Is it a Stroop waffle? Is that what it is?
Yeah.
That United offer that, they serve that, and that seems to get them more transatlantic passengers, apparently.
If you're in business class, they serve a martini called a tea decision in honor of Dr. Alarian. John, an important statistic on oil. I'm glad you brought that up. That XOI from another time and place, we are 45% below where we were in January of this year.
That's the catch-up story, Tom. How much space is there left in this trade, given where we were? We are advancing on crude. Brent up by 3.5%. WTI up by almost 4 percentage points. Coming up on this program, Kathy Hochul, New York Lieutenant Governor. What a timely conversation. Coming up very shortly on Bloomberg Surveillance.
With the First Word News, I'm Rishka Gupta. There's word today of another promising vaccine in the fight against the coronavirus. Moderna says its shot has been found to be highly effective in preventing the disease. The vaccine had 94.5% efficacy in an analysis of late-stage trials. Interim results suggest the vaccine may also block severe cases. A week ago, a similar shot developed by Pfizer and BioNTech was found to be more than 90% effective. The chairman of the Securities and Exchange Commission is stepping down. Jay Clayton will leave at the end of the year. Clayton is a former corporate deal lawyer who has led the SEC since 2017. His term is set to expire in June. The UK is signalling it won't back down as Brexit talks with the European Union enter another crucial week. Officials from both sides say the coming days will be pivotal in trying to reach a trade deal. Two of the most senior officials from the Brexit campaign left Prime Minister Boris Johnson's inner circle last week. The UK's chief negotiator insists he will not be changing his position. And it's a milestone trip for Elon Musk's SpaceX. 4 astronauts are aboard one of the company's capsules on SpaceX's first manned mission to the International Space Station. It's scheduled to arrive there tonight, New York time. SpaceX and Boeing have won contracts from NASA to fly crews to the space station. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They move the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Meetings between our top scientific advisors and the officials of these drug companies, not just Pfizer, but there are other promising vaccines as well. We're going to start those consultations this week. It's great to have a vaccine, but vaccines don't save lives. Vaccinations save lives. And that means you got to get that vaccine into people's arms all over this country. It's a giant logistical project.
It will be a giant logistical project, and it had already started. That was Ron Klain there, President-elect Joe Biden's chief of staff on Meet the Press. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Good morning to you all. This Monday morning, we shape up as follows. In the equity market, it's another lift for the cyclical parts of this equity market. The S&P 500 advancing 1%, small caps advancing much more so. Treasuries lower, yields higher, up 3 basis points on a 10-year to 0.92%. And there's the bid back into crude. $41 $2.74. We're up by a little more than 4 percentage points off the back of a headline from Moderna, the coronavirus vaccine found to be 94.5% effective in analysis. Tom Key, some extra fuel for that cyclical rotation.
There's no question about the cyclical rotation. I note the red on the screen with the NASDAQ 100 ever so slightly red. We've given up a little bit of the ebb that we saw an hour ago, the boom, I should say, from an hour ago. We've been looking at the vaccines, which go out into 2021. Now we need to look at the reality of the present. You do that when you're a politician. You do that when the Buffalo Bills lose a heartbreaker to Arizona, as we saw yesterday. She is the lady from Buffalo, the lieutenant governor of the Empire State. Kathy Hochul joins us right now. Kathy, I got to go to the money question for all of our New York City audience on radio and on television. What is your sense with Governor Cuomo of what Mayor de Blasio and you will do about the school system of New York City?
Well, thanks for having me on the show, and I'm sorry you had to twist the knife in my heart about the Bills' loss, but that's another topic. With respect to the schools, the time that was back in the summertime when we were having lower infection rates, and the parents and the teachers and the city administration decided that if the number of infection rates hits 3%, that'd be a trigger to close down schools. But what the governor is saying now is that we're in a different era. We're now finding out, because of testing in schools, that the schools may be a safer place than having the children back out in their communities. So we are prepared to, work with them to say, can we make an adjustment here? Can we talk about having the schools stay open, because that may be better?
Okay, let's do the math. It's 0.17% on the schools. Many other states are at 9%, which is where New York State's talking about, and de Blasio was married to 3%. How do you convince him and the teachers union in New York City to get to where Nebraska is, to get to where Oklahoma is, for that matter, to get to where Chicago is on this percent statistic?
Well, that doesn't matter. It's what the parents and the teachers and the administrators feel comfortable with. We're not going to, we can say that you're going to be going back to school, but if the teachers say we don't feel safe, they're not showing up. If parents don't feel safe, the kids aren't showing up. Then you basically don't have an educational process that works at all. So you have to get buy-in from everyone. And that's simply what the governor has proposed over the weekend, to not have an automatic shutdown at 3%, but to use what's going on in the schools, testing results that we didn't have when the decision was made to trigger 3%. Now we have more data points. Why not look at the data that's in front of you? And if a school itself has a low rate of infection, less than 1% or whatever the metrics are going to be, why not keep them open? Because not only is it safer perhaps for the children, but also you think about the child care crisis that we've spoken about on your show for a long time, about how we're going to be able to let parents, particularly women, because it always falls on the shoulders of women, to figure out how to get back to their jobs when their schools are shut down again. That hurts our economy. It hurts our comeback. And so there's many dynamics involved here. Safety always being first, but realizing now that a 3% threshold is something that should be relooked at with the consultation with the parents and the teachers.
Kathy, the reality that you're looking at right now is so vastly different than the reality that equity strategists look out when they look out over until the end of 2021. How much economic scarring will there be in New York State, New York City, as layoffs have to begin, as we do not necessarily get any aid from Washington, D.C. during a lame duck session?
We won't have that aid immediately, is what it seems clear to me, and I'm willing to be pleasantly surprised that we can actually get Mitch McConnell to do the right thing and to say that, yes, states have suffered. Oh, I realize now it's not just the blue states. The red states are in trouble. Therefore, we will help them now, because he will go by whatever he thinks is in the political interest of his own party. Okay, fine. We're at a point now where the interests are all aligned. All American states need help with the testing, with the PPE, the help getting more doctors and nurses into some of our remote states that didn't expect to be dealing with this. So, but even if that doesn't occur in this lame duck session, I do believe that Joe Biden understands the urgency with this. Governor Cuomo has a strong relationship with him. We all do. And he knows that you cannot have a recovery, and we said this before, a recovery for the nation without states like New York being able to come back strong, and to reduce the chance of more massive layoffs and to keep businesses prospering. That is our objective. We have to keep that going. So under a Biden administration, we feel very confident that the money will start flowing for state and local governments to help us get out of our holes budgetarily, but also to continue funding initiatives like vaccination distribution.
Lieutenant Governor, that will be early next year. We have some tough months ahead of us, as you know, and the numbers out of America have been quite worrying across many states in the United States. Lieutenant Governor, the President has been criticised for not being engaged enough on this issue, with cases increasing at a rapid rate. What is it you need from the federal government specifically that you've requested and aren't getting right now?
Money. Also, a distribution plan for the vaccination that could be helpful. Let's work on that now, not wait till the vaccine is available, then all of a sudden say, oh, let's start figuring it out. That has to be figured out now. In the state of New York, we started working on our plan back in the summertime. But money is the number one thing, because that will allow us to continue funding the state and local, the communities, the first responders, the teachers, the healthcare workers, the child care workers. I think we need money first because they didn't help us when it came to testing. We could have used the Defense Production Act invoked months and months ago. Basically now the president checked out. He never wanted to lead. This could have been his Winston Churchill moment. He could have been a hero. He could have won the election if he had done this right. And he blew it basically, and now the consequences are he needs to move over, let the transition team of Joe Biden take over, let them have the opportunity to find out, where the money is, what programs need to be continued, what regulations need to be changed. Let them hit the ground running and start saving our country, because it did not have to fall this far. New York State still has the third lowest infection rate in the nation. After Vermont and Maine, we're at about 2.6%. The rest of the nation could be at 2.6%, and we could be functioning. But the president didn't care. He didn't do anything along the lines of what we were asking for early on. So the damage is done, and now it's time to do cleanup.
Lieutenant Governor, appreciate your time. The conversation will have to continue. Kathy Hochul there of New York. The latest over the weekend, Tom, came from the president. The tension between New York and the president, very, very clear when he said, Andrew Cuomo, the governor, will have to let us know when he's ready for the vaccine, because otherwise, quote, we can't be delivering it to a state that won't be giving it to its people immediately. That tension speaks for itself sometimes.
Well, the tension's there, and early in that interview with the lieutenant governor, the tension between Albany and New York City as well. John?
From London and New York this morning, good morning. More fuel for some vaccine hope. This time, not from Pfizer, from Moderna. More to come right here on Bloomberg Surveillance.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Seen a massive momentum shift in the last week that we don't think investors should be ignoring.
Fiscal stimulus is necessary in some form. The sooner the better.
The vaccine is really the game changer here to bring us back to normalcy.
In the months ahead, we will see perhaps less volatility than we've seen so far this year.
The market in the next 2 months seriously will start to reprice everything.
Growth will pick up a lot in the second half of next year as people get back to normal.
We've been in a bull market. We remain in a bull market. If anything, patterns are just magnified.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Bloomberg Surveillance. Thrilled you're with us on Bloomberg Radio and Bloomberg Television. It was not the surprise of Moderna of the ratios. It was a surprise of how able they are to get the vaccine out. And John, that lifts the market up. We almost made Dow Futures 30,000, SPX 3619, and it's a correlated lift, John, isn't it?
Maybe the lesson of this morning and the last 9 months is don't bet against human ingenuity. Morgan Stanley over the weekend said, keep the faith, trust the recovery, keep the faith in the science. Last week it was Pfizer, this morning it's Moderna. The efficacy rate, 94.5%. That put a bid into this equity market. We had a bid all through last week. It was where the rally is, though, that gets people's attention. It's not the big cap tech. That story rolls away. The story that rolls up is small cap America, Tom, and the international value story as well. And that's the great debate of this very moment. The short-term problems, the issues across America, and the long-term hope that we get that vaccine.
Lisa, what do you see in fixed income? I mean, we talked about yield higher by ever so slightly, and we're not out to the yield 0.97%. Full faith and credit of November 9, I believe it was. But what do you see in IG and high yield as we see yield up, price down?
Well, you see yield up with full faith and credit government bond yields. You see yield down when you look at credit default swaps. You look at the implied measures based on derivatives this morning. Basically, credit risk is on. People are flooding into high yield debt. You saw yields reach record lows over the past few weeks, despite the fact that we are in a pandemic. The idea here is frankly edifying the Russell 2000 trade as well. The idea that smaller companies that need a bridge, that need a lifeline, will have that much easier of a time getting one, given this faith in the vaccine, Tom.
You know, John, we've been talking here, and we'll talk through the morning on Bloomberg Surveillance and Mr. Farrow's other properties as well about this juxtaposition of the good news and the market up nicely, John, and then any number of headlines, whether it was Lieutenant Governor Hochul of New York or there's the governor of New Jersey, John. You know, I was going to have you over to Thanksgiving, John. You can't come as we're going 25 down to 10.
Hang on a minute. Who are the 10?
The
Why
10?
don't I make the 10?
Me.
Who makes the 10?
Mrs. Keene. Vet Bill has 3 people coming. Afterthought has 2 people coming. And there's a couple wild cards in there, names I don't know.
Vet Bill's mates get the Thanksgiving seat ahead of me.
Bird.
Well, Vet Bill got the turkey, Tom.
Exactly. Vet Bill got the turkey. What do you call it? The Ramble out in Central Park. It was a bloody sight, to say the least. Drew Armstrong joins now.
We're not even going to pretend to like each other now for the rest of this program. Bring Drew in, please.
I'll do that. Drew Armstrong, Bloomberg News senior editor for healthcare, probably invited over to Thanksgiving. By that time, we'll be down to 5 seats at the table, not 10. Drew, it is amazing the juxtaposition right now. What is your timeline for vaccine to the rescue?
You know, the timeline on this is good news this morning aside, which is really good news, is this is still going to be a little while. They've talked about, I believe, having a couple tens of millions of doses available in 2020 and much more than that in 2021. But the reality is that early on, assuming that these are allowed out for use by the FDA under an emergency authorization, they're going to go primarily to frontline healthcare workers, ultra vulnerable people, and other folks in frontline positions. For the general public, you know, I'm a relatively healthy, soon-to-be 40-year-old, you know, probably waiting until sometime next year for access to these. But that said, I mean, cannot emphasize what important step and optimistic step this does appear to be.
So let's talk about the timeline for emergency authorization and how we will start to see life change as emergency responders and other individuals start to get inoculated.
Yeah, you know, so emergency authorizations, just to rewind a little bit here, the FDA, a normal full approval that the FDA would do, it typically would look at things like having 6 months of safety data, and the review would likely take a little bit longer, probably at least a couple of months. Under emergency situations, which I don't think anybody would argue that this pandemic is, they can lower their threshold slightly in terms of the data that they want to see in terms of something being safe and effective, which is how we've seen a lot of therapies test and soon vaccines come out onto the market. In this case, what they have been looking for is a degree of efficacy, which these two vaccines, the Pfizer one, the Pfizer-BioNTech one, and the Moderna one have easily passed, and then they want to see 2 months of safety data. We expect that the companies are going to apply for those emergency authorizations sometime in the next couple of weeks, and then they will also keep sending FDA safety and efficacy data as they get it. So we could see a vaccine being used maybe sometime in December. I think for most of us, it's not going to change things that much. If you're a doctor or a frontline healthcare worker or someone in a nursing home or otherwise super vulnerable, it may change things a lot.
Well, Drew, let's talk about adherence to social distancing at the moment and therapeutics and the development of them. Where are we with therapeutics? Because that's what we need to lean on heavily now for the next 30 days or so.
Yeah, that's going to be right, and probably longer than 30 days. I think it's worth stating that a vaccine does no one any good if it is in a lab or a freezer somewhere. Just because there is good vaccine data out there, it doesn't help anyone except for the folks in the trial who got it. You know, it does not change the situation on the ground. It does not make the disease any less dangerous. And, you know, if people think that they can all of a sudden, you know, go doing all the things that they used to do and that the world has changed, it is not. So that's why therapeutics are particularly important. We've seen two things happening. One, we've gotten a number of therapeutics, some of these antibody drugs from Regeneron, from Lilly. We obviously have the Gilead drug, remdesivir, which is an antiviral. And then, you know, the other thing that's worth noting is that medical care for this disease has gotten better. When this thing hit New York back in March and April, people had not treated this disease before. They did not know what they were dealing with, and we were learning on the fly how to treat patients with this disease. A lot of providers from all around the country flew in to help out New York, to their great credit. Those people gained a lot of experience with how to treat this disease, and the medical establishment also dispersed all the things that were learned around the world over the last several months. So, you know, your odds of surviving this disease as an individual are much better. I will also counter that by saying that this disease is also far more widely established, spreading far more rapidly in places of the country that have not seen it and that may not have the kind of healthcare resources of the places that got hit earlier. Mm-hmm. And so it remains very dangerous and still has the ability to swamp healthcare systems. And we're seeing New York-like situations in some places like Texas and in the upper Midwest with, you know, I mean, freezer trucks being used as morgues outside of hospitals. That is some very scary stuff.
Drew Armstrong, thank you so much for the briefing. The troubled Midwest, and we'll see how the East Coast does here with deaths and hospitalizations rising up a little bit. Right now, as we talk to Elisa Abramowitz about the dynamics of two bond markets, full faith and credit, and everything else, Noel Coram joins us right now with Invesco, particularly on the credit space as well. Noel, I love what you say about hiccups, in that out there you wonder if we get jostled within fixed income, what happens to the price of these two worlds? What happens to credit if we get a hiccup?
Right. So especially in IG and high yield, we're looking at all-in record lows for yield. So there's not a lot of space right now for those hiccups that you're talking about. So we do think that it makes sense to diversify credit risk going into year end. We're not saying, get anxious about selling here, but we are saying that it does make sense to diversify risk given the potential for some of those hiccups.
Noel, we can talk about how you would diversify in just a moment. Let's just talk about what a hiccup would actually be. Can you tell me what a hiccup would be that would actually lead to material spread widening in U.S. credit markets?
Right. So we are kind of looking at this in two major risks. We have the risks of the COVID cases rising, hospitalizations rising. We don't see it peaking out. Yes, the vaccine news is good today, but at the end of the day, we're still facing a pandemic, and it's not over. And then also we have the fiscal stimulus that we were 2 weeks ago talking about $4 trillion. And now it's going to be much smaller. And so if we don't actually get that money when the American people need it, that could also potentially weigh on growth and ultimately weigh on the credit market.
What you're saying, Noel, is different to what many people are saying. You are saying there are limits to how much we will tolerate in the next few months. That's very intuitive. That's not what we've heard over the last week or so from market participants. We've been told that we will just focus on the back half of 21 and the hope of a vaccine. Talk to me about those tolerance levels. You will talk to people in the market all the time, I assume, still. What are they saying to you? If 1 million COVID infections and breach in hospital capacity, or at least the threat of breach in hospital capacity in many areas across America right now isn't enough to lead to material spread widening, what on earth is?
So we think that, really, if we don't see the fiscal stimulus package come through in a meaningful way, in a timely manner, then that would be enough to create some volatility. Also volatility around the back and forth of, negative COVID headlines versus positive ones. And, while the vaccine headline today is a positive one, tomorrow when we get the, negative COVID news, it could not be. So when we think, while we're not, totally unloading our risk, we do think it does make sense here to be a little bit cautious because this war, is not over, and we still have a fiscal stimulus package that, states need, consumers need, small businesses need, and ultimately that has to get delivered.
Noel, there's an important distinction here between volatility in headlines, volatility in beta sentiment, and the alpha aspect, the idea of a concern about companies going bankrupt, being unable to finance themselves going forward. Which is the risk that you are concerned about with your caution?
So for us, we're thinking, more of a big picture. While there is a concern that companies are going bankrupt, there are likely to be some defaults. There already has been this year. We're not looking at, the numbers that we're in March, where it was around 28% expected defaults for 2020. But again, that's largely dependent on the fiscal stimulus package and that getting delivered.
Noel, great to catch up. Appreciate your insight in this market. A rare interview where someone is concerned about what's happening in the near term and what it means for this market. Noel Coram, thank you. Invesco Portfolio Manager. I joke a little bit. It is about that tug of war between the short-term risk and the long-term hope. The hope this morning, fueled by the headline out of Moderna that we do have a 94.5% efficacy on their vaccine and development. Here's the price action for you. The Russell advances, the small caps are the winning trade over the last week. The NASDAQ is the losing trade over the last week. Tom, we talk about that losing trade. Let's talk about some single names. Zoom down by about 5% in early trading. United Airlines, which you mentioned a little bit earlier, up by a little more than 10% in early trading. That just gives you an idea of the shutdown versus reopening story that is bleeding through this market.
No, it's a guesstimate, John, but it all comes down to the aggregate demand, and it's rolled over. Lisa, I believe, mentioned five-year forwards below. Let's summarize that quickly, John. In the United Kingdom, there is a deflationary tendency. Europe is maybe flat as well, and then in the U.S., it's indeterminate. But right now, disinflation is in order.
Can we unlock some of that reflationary cyclical tilt with the hope of a vaccine as we work our way through some really difficult months in the United States of America? That is the trade that is being put on increasingly over the last week. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Coming up next, Stephen Stanley of Amherst Pierpont, the chief economist from London and New York this morning. Good morning to you all. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. There's word that another vaccine has been found to be highly effective at preventing the coronavirus. This time, it's Moderna that's out with details of a late-stage trial. The drug maker says its vaccine has 94.5% efficacy. Results also suggest the vaccine may block severe cases. The report comes a week after a similar vaccine developed by Pfizer and BioNTech was found to be more than 90% effective. The chairman of the Securities and Exchange Commission is stepping down. Jay Clayton will leave at the end of the year. Clayton is a former corporate deal lawyer who has led the SEC since 2017. His term is set to expire in June. President-elect Joe Biden's top coronavirus advisors say a national lockdown isn't on the agenda. One of them, former Surgeon General Vivek Murthy, says the preferred approach to fighting it is, quote, a dial that we turn up and turn down, depending on severity. U.S. case records have hit records over the past 2 weeks. President Trump could potentially tie the hands of Joe Biden when it comes to China. Bloomberg has learned the president plans several new hardline moves against Beijing in the remaining weeks of his term. The National Security Council says future presidents will find it politically suicidal to reverse what it calls President Trump's historic actions. And in sports, Dustin Johnson made history while winning his first Masters tournament. The world's top-ranked golfer shot a record 20 under par to win by 5 shots. It was the largest margin of victory at the Masters in 23 years. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
According to some estimates, a national lockdown costs $50 billion a day and hundreds of thousands of jobs every single day. Ideally, we won't go to a lockdown. I will not go. This administration will not be going to a lockdown. Hopefully, whatever happens in the future, who knows which administration will be. I guess time will tell. But I can tell you this administration will not go to a lockdown.
Hopefully, whoever that administration might be. That was about as close as we got over the weekend to recognizing the future Biden administration. There was a tweet, then there was a retreat, there was that statement on Friday, then there was the walk back shortly there afterwards as well. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This morning, what a morning we've got for you. It's a repeat of last week. NASDAQ negative, Russell small caps to the moon. Here's the price action. S&P 500 futures up 37. We add 1% to the record highs at the close from last Friday. We add a bit more weight to them. In the bond market, the sell-off fades. Yields are up 2 basis points to 0.9160%. Last Wednesday, high end of the range, 97 basis points. Right now, with 5 or 6 basis points south of that, Tom, we're not getting that big move in Treasury yields. Lisa pointed out early on, after the headline cross from Moderna, that 94.5% efficacy rate for their vaccine gives equities a boost. Treasuries, no big moves this morning.
Well, it's, after Pfizer, and the answer is we saw a huge move of Pfizer. Again, folks, I'm going to make clear that what this is about is deeply discounted sectors, deeply discounted categories, and they've bounced off that discount, but nowhere near their means February 14th and before. Look at energy, look at banks and the others as well. We'll continue to monitor that. I'd suggest look at what matters in the mid-morning, and that is the open with John Ferro at 9 a.m. Right now, Emily Wilkins, Bloomberg Bloomberg government. We just heard the president talk there about, well, the transition or the non-transition, as you'd like to put it. Emily, real simply, what will you listen for today in your Washington?
Well, one of the big things to be listening for is that Biden and Harris are expected to address the nation on their economic plan, seeing what details are in there, what Biden continues to push. It'll be a little interesting to hear what he decides to speak about because he doesn't yet know whether or not Democrats will have control of the Senate. And that's going to impact exactly how much Biden can actually get done of his economic plan.
Okay, well, they got to get something done, and there's going to be a plan in that. But come on, General Milley's comments over the weekend were thunderous. I've never seen anything like that from a commanding officer of our military. You had the president just talking and on and on and on. What's your resolution through the week so this week doesn't become, say, the second week of January?
I mean, the other things we'll be looking for is, definitely seeing what happens with the Trump campaign. We did kind of see him seem to initially admit that the Biden administration will be coming next over the weekend. Then we saw him walking back, saying the election was rigged, that he conceded nothing.
Oh, yeah, but Emily, Emily, I don't mean to interrupt, but simply, who is advising the president, or is he all alone by himself?
There are a number of people who are still talking to the president within the president's inner circle. I think it's a lot of the same figures that you've heard, Jared Kushner, Rudy Giuliani, those types of individuals. And I think a lot is going to come down to seeing not just what the president says, but also what the lawsuits say. We saw the lawsuit change in Pennsylvania over the weekend to cut out a major allegation that Trump campaign people were not able to watch the count. And so I think that's kind of a sign on how the campaign is thinking about things and how they see their legal challenges.
Emily, we've been playing this silly game of trying to interpret the president's tweets and comments, not just for the past weekend, but for the past 4 years. And we're doing it again over the weekend, looking for a concession that isn't there. Can you just tell me when these states will start to certify their results?
So the official date is December 14th. That is when states are going to say, this is it, these are our electors, and sort of lock everything in. Another date to keep on is December 8th. That's when anyone who wants to contest the results for a particular state has to sort of get everything in by. So those are kind of the two key dates to watch. And obviously we'll be seeing what happens in the next few weeks if the Trump campaign does sort of admit that the Biden administration is coming up next. And we're also going to keep a look on the GSA, that is that government entity that has to officially sort of push the button, give the green light, say, yes, this transition is happening, and that will sort of make things a little bit easier for the Biden team to get settled and get adjusted.
Emily, the market has moved on. The market has voted, and the vote is that Biden will be the next president, according to the lack of turmoil, frankly, in markets, despite the fact that some could say there still is somewhat of a contested election or it hasn't been called. Now the focus very much on the vaccines that are going to be coming out as early as later this year, potentially, and then next year. And then there's a question of fiscal support. Is that basically dead in the water based on your conversations with current Congress members in Washington?
I don't think anyone on Capitol Hill would necessarily classify fiscal support for COVID as being dead in the water. Just on Friday, we heard Democratic Speaker Nancy Pelosi say that it was a top agenda item, that it's all hands on deck. We've seen similar things from Republican Senate Majority Leader Mitch McConnell. The question is, can they actually come to an agreement? And I think we might sort of see that this week because the House is back in session, the Senate is back in session, everyone's done with the election and they're getting started, ready to legislate again.
Oh, then what are they going to legislate? I'm absolutely fascinated by that statement, Emily. They're going to legislate what? The answer is we don't know until Georgia, right?
Well, not really. We do have a government. The government does need to be funded past the December deadline.
Yeah.
We're headed towards the government shutdown right now, so they're going to have something on that. And I think that there is a momentum on either side to potentially get something done with coronavirus stimulus. I think there's a question onto whether or not that will be done, but I think it's fair to say that that's something that lawmakers are at least going to be trying to work on in the next few months.
Emily, do you sense there is a concern in Washington about governors now introducing more restrictive policies? In the conversations that you're having with people on Capitol Hill, do you sense that concern?
I think to a certain extent, throughout this pandemic, the federal government has sort of looked to the states and state governors to be the ones to sort of mandate for their own citizens what they're going to do. I don't think this is a big change in terms of what we've seen. I think this is a bit of a repeat from what we saw back in the spring when governors started talking about a lockdown. I don't think this necessarily changes anyone's prerogative on Capitol Hill of whether or not stimulus does need to get done. But I think it's definitely something that people are watching to see how governors respond and to what degree they view the threat.
Emily, great to catch up, as always. Emily Wilkins there of Bloomberg Government. Tom, that's the story, isn't it? If the governors start to introduce more restrictive policies, if they start to inch towards lockdowns that look even remotely like what we had back in March, April through May, then surely that just forces the issue down in Washington, D.C., whereby they've got no choice whatsoever but to push through a bill.
Yeah, the only thing that forces the issue to me is a jobs number turnaround, unemployment rate turnaround, and also, John, the sheer hardship of income substitution going away. What's interesting to me, John, it's radically different than what we're experiencing in the United Kingdom. To me, that's the polarity right now between across the Atlantic, I should say.
Well, the stay-at-home restrictions this time, Tom, are advisories. They're not orders, and that's the shift. How on earth do you tell someone they've got to stay at home and not work if you don't replace their income? I don't see how you can do that. And I don't see why anyone's going to follow that if you can't.
That's where you'll get finally something to act here. You know, again, and Greg Vallier's got the math this morning, as do many others as well. We're going from trillions of dollars of aid down to one-ish, even under one-ish, if you believe the Republicans. And most of the experts we talk to, John, say that really doesn't move the needle.
The news this morning moves the needle. Moderna, 94.5% efficacy. The stock up by 12.4% in pre-market trading. Laura, Lisa, rather. I'm not sure why I've called you Laura.
That's
the story
from now
in
on,
the
she's
equity
Laura.
market.
I love that.
That's not a story from the weekend. Just be sure about that.
Thank you.
Lisa, in the equity market, we advanced on Moderna by about 12.4%. The story of this rotation, can you get that durable move if the bond market doesn't participate? And as you said an hour and 25 minutes ago, right now this morning, the bond market's not playing ball in a big way.
And what I'm wondering is how much is this a bet that there will be reduced fiscal support as a result of the optimism around vaccines, and how much is this, to your point, simply an unwind of other positions, and the bond market's already been through that?
Laura, Lisa, Laura, what am I doing?
You're killing it, John.
What happened with Laura over the weekend?
John, I got so much response on this. I mean, Lisa's doing Chinese takeout for Thanksgiving, but John, you and I, John, it's a new thing. Thanksgiving Zoom. We can do it.
I would love to do that with you, Tom.
You know,
I'd love to do that.
I just zoom
I think
right
this would be the 4th or 5th Thanksgiving we've done together, but this one will be over Zoom. That's fun. A couple of years back, it was Laura, you and me doing Thanksgiving together.
Yes, I hear Laura's
nice.
great.
That was nice.
Yeah. She was sober.
many times a day do people ask you when your vaccine is going to be available?
Yes, well, that's definitely a very regular question, whether it's from employees, customers, media, or my mother.
The outlook for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check.
They are torturing themselves to explain that they're there, ready, willing, and able.
The Fed has basically done all it can do, with the exception of extreme emergency measures.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
From London and New York, this is Bloomberg Surveillance. Good news on the vaccine front. Last week, Pfizer, this morning from Moderna. What does it mean? More fuel for the small caps bid. The Russell up by 2.21%. The NASDAQ down by 1/3%. That spread reopens again. That rotation is back on. In the bond market, you want to see that supported move into financials for value, for the cyclicals to pick up. Do you need the bond market to play ball? Right now, it's not really. Curve steeper, yields are higher, but just by a little bit, up 2 basis points to 0.91%. Last Wednesday, we topped out at 97. Another thing that's not playing ball, switch up the board and get to foreign exchange. This has been the story of the last week for me. If you have that improving cyclical appetite, if you have that move into international equities, that bid into Europe, what's going on with the euro? Negative 0.1%. Euro dollar 118.25. Tom, I keep coming back to it. I keep beating this drum because this is the trade that just does not fit neatly with the story we've been told over the last several weeks and months.
Pacific Rim currency pairs, John, out to new highs here about 2 hours ago, and they've ebbed away as well. As we see Dow futures move up 500 something down to up 485, 1.7% move. Right now, and this is really important on a Monday, let's recalibrate the American economy. He is award-winning. Stephen Stanley with Amherst Pierpont does wonderful work with the conventional function Y equals C plus I plus G plus whatever the export noise is. Steve Stanley, what matters right now within that equation?
Well, I think consumption has really been the star of the show, and that's what we're looking at. I mean, consumer has held up much better than I think most people expected through the pandemic, and now with renewed restrictions and kind of cuts in mobility a little bit, I think there's obviously some concern about whether the consumer can continue to get back toward normal over the next couple of months.
Give us the calendar of the need for income substitution. Benefits, I guess, 1231 disappear for many, but how urgent for you is income replacement right now?
Yeah, I think we're in a different place than we were in the spring. I mean, in the spring, we put forward the $600 a month unemployment benefits as well as a round of rebate checks for everyone. And I think at this point, the whatever income replacement we do probably needs to be more targeted. So I think the idea of continuing the unemployment benefits, certainly, continuing them beyond mid-year or the end of the year, but also maybe putting forward another bonus. It doesn't necessarily have to be $600, but perhaps $300 or $400 or whatever, makes a lot of sense because there's still plenty of people who basically can't work because of the pandemic. I'm not sure that we need across the board help the way that we got in the spring. So that, to me, that's the key distinction.
And Stephen, this is a really important nuance because right now we're looking at American consumer finances that are the best shape in decades. People took these checks, they paid down their debt, they don't have anywhere to go to spend money, and so you're seeing really, really good balance sheets, but that's an aggregate. What is the long-term economic consequence of the lower tier of workers who are seeing their jobs get cut at a faster pace and who don't have the same kind of cushion even after the round of stimulus?
Yeah, well, I mean, obviously those are the sorts of people that have to live paycheck to paycheck. So the loss of a paycheck means a lot more for someone in that financial situation than it would for, someone that has a nest egg. And I think, again, that's why there is, in my view, there is urgency to make sure that we're providing ample support to that group of people, the people who are unable to work and need the money right away. I think, maybe the urgency for for the rest of the population isn't as great. I mean, we certainly made up over half of the jobs that were lost during the lockdown. So there are a lot of folks who were out of work in the spring who are back, but there's still plenty who are not. And I think, those are the folks that we want to try to take care of, and especially now that we have a sense that perhaps it's only a few more months. Maybe the vaccines are broadly distributed by the spring, and things can get back to something much closer to normal at that point. So if I'm a lawmaker at this point, it makes it easier, I would think, to say, okay, well, we can support people for 3 or 4 more months, but it's not an indefinite thing anymore.
Stephen, let's talk about the economic data. Tom mentioned the Asian currencies doing tremendously well recently. The data out of China, fantastic, decent again this morning. I don't think it's ever too early to talk about payrolls for this month when it comes out in early December. Stephen, what are you comfortable forecasting at this point, given the direction of travel with economic restrictions coming up across America?
Yeah, I would say most likely that we're going to see another deceleration, and this one could be more significant than what we've seen over the last couple of months. The pace of growth was fairly steady over the last 2 or 3 months, I would say, certainly in the private numbers. You're probably going to see a slowdown, obviously, with the virus having picked up. But I would say, we've seen a flurry of new restrictions put in place over the last week or so. And so my guess is, last week was the payroll survey week. So my guess is that whatever slowdown you're going to see in the pace of job growth over the next several months is more likely to be clear in December than in November. I think we'll get some slowdown perhaps for November, but then maybe a more significant one on the back of some of these virus restrictions in December.
Let's add to this then, Stephen, and think about the fact that this economy has had the stress test, a severe one, back in spring. Can you model what it might look like when you get the same stress test again? You have it once, you get it a second time, and how corporations and individuals might respond, maybe differently?
Yeah, I think the one thing is that people have kind of gotten used to the new reality. So if you think about, for example, manufacturers, they closed their plants for almost 2 months, and then when they came back, they had to retool their operations to provide for a more socially distant workplace. And having done that, I think it makes it far easier now because they've already kind of adjusted. So really, I think the bulk of the adjustment that needs to be made now is just kind of dialing up and back the degree to which people are getting out and about, the mobility and the level of contact that people are having. And so that does affect restaurants and high contact industries like that. But I think the bulk of the economy, the rest of the economy, hopefully has already made the necessary adjustments and won't be disrupted too badly in the current situation.
Steve, is the stock market linked to your world?
I think I would look at it as a gauge of sentiment. And I think, clearly at this point, it seems to me that the stock market is looking through, or investors are looking through the current bad news and into, the prospect of an effective vaccine at some point next year, and then getting back to something closer to normal over the course of 2021. That doesn't do anything for us today in terms of the number of cases and hospitalizations and deaths, but it certainly suggests that people are hopeful that things will get back to something closer to normal as we move into 2021.
Stephen, there is some hope in this market this morning, that's for sure. Stephen Stanley there of Amherst Pierpont. Thank you, sir. Let's talk about that hope and the fuel that goes into that hope this morning. Moderna, 94.5% efficacy in their trials of their vaccine, follows Pfizer last week at 90%. And this is what happens in this market, Tom Keene, up 13% for Moderna this morning. Small caps get a bid, big tech does not.
Well, yeah, it's a shift that's going on, and you look at the Morgan Stanley note out yesterday where they lift up their targets. People, John, are really beginning to recalibrate. I want to go back again to the way we're seeing people lift up 7%, up 6%, whatever the single-digit move is. I really question if that's framed into people's minds right now. They're buying, but they're just buying to be on board. They're not buying to go to a reachable target yet.
Morgan Stanley, 3,900 year-end 2021. And Lisa Abramis in the mix with that call is a call on a bond market for a higher 10-year yield. This morning, as you said, right at the top of the program when that headline came through, Lisa Abramovich, we are not getting that move in that bond market that some people might have thought you might get.
And it's actually rolling over. It's actually even more muted now. You've got barely any move at all at this point on the 10-year yield, which is very interesting, especially with the Morgan Stanley call, I believe, of a 1.45% 10-year yield by the end of next year. The bet here, perhaps longer-term growth doesn't escalate that much. Perhaps we return to a new normal that is still slower growth with a whole lot of debt and an overhang still from the pandemic, John.
In just a moment on this program, we're going to turn to a panel at the New Economy Forum. And on that panel, Tom, will be Blackstone's Steve Schwartzman. In the news over the weekend in the Financial Times, because there was a call of business leaders, and Mr. Schwartzman was one of those participants on that call. The Financial Times reported over the weekend that he defended the president's right to challenge the results and question the results out of Pennsylvania and the process through which the count went through, Tom, over those several days after the vote. It was an interesting defense of the president at a time when Lisa asked the question, who has the president's ear? That is an individual that has the president's ear and has done for much of his term.
Well, you know, I want to make clear here, John, and all the principles within this important article by Andrew Edgecliffe Johnson, we speak to, you and I, on surveillance, on the open, on the real yield and all. Mr. Schwartzman, but also lower in the article was the uproar at this meeting put together by Jeff Sonnenfeld of Tim Snyder, who is not inflammatory, but is an academic who speaks his mind. And Professor Snyder, John, was talking coup-ish, and Mr. Schwartzman really pushed back against that and simply said, we have a democratic process. And then Blackstone put out a statement very, very clearly, this is Steve's opinion, etc. But I think the way it was spun over the weekend was a little unfair to Mr. Schwartzman.
Well, there's 2 points that Mr. Schwartzman, according to the Financial Times, and I'm not privy to the conversation they had, I'm literally just going on the FT's reportings. There's 2 points here, Tom, that are made in the story. Point one is that the president has a right to challenge the results and go through the legal process. And of course, he has that right to do that. That's point one. The second point was when he questioned participants on that call, according again to the Financial Times, and asked them, did they not find it surprising that early votes in Pennsylvania had favored Mr. Trump, quote, only for later counts to tip the state in Mr. Biden's favor. Now, as we know, the process of the count, Tom, it started with the votes that were made on the day, and then the mail-in ballots were counted, which skewed heavily to Vice President, now President-elect Joe Biden. And it's the second point that seems to be more controversial. The president absolutely has a right to go through the legal process, Tom, and challenge these results if he so wishes. It's the second point about the count, which implies some kind of fraud, that is questionable.
Yeah, okay, that's fair, but I want to make clear this is, again, one line in an article versus reading the whole article. Brian Roberts of the Roberts family of Philadelphia and Comcast defended and explained within Mr. Sonnenfeld's call how they do things in Pennsylvania. And yes, Steve said something with his support of Mr. Trump and also congressional Republicans down the ticket. Yeah, he said something that was a little controversial, but I thought the article was much more balanced than what the uproar was out on social media against Mr. Schwartzman and indeed indirectly against Blackstone.
I couldn't agree, Tom, but that just comes down to how people behave on social media and whether people actually
that's the point. It's
read
just
the article
media.
or not.
It's like, John, when you go after me on social media, I mean, people don't know the whole story, which we're actually on speaking terms.
Really?
Just about. For this program for 2 hours with Lisa mediating quite often and trying to separate the two of us when things get a bit dicey.
30 seconds.
Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. I'm pleased to say we can now cross over to the Bloomberg New Economy Forum. Like many things this year, just a little bit different. The third annual event is going virtual for conversations on global importance of finance, trade, climate and health, beginning today. And right now we take you to that panel on how low-income essential workers have suffered disproportionately in the COVID-19 lockdowns. On that panel, as we suggested, Blackstone's Stephen Schwartzman and IBM's Ginny Rometty. Let's take a listen.
The low-skilled, but actually affects quite a broad middle majority, the middle class. In most advanced societies, certainly, a long period of relative stagnation of incomes, diminishing jobs in the middle, which we're all familiar with, the polarization of the job market. And for large countries, particularly outside of the metropolitan areas, just a gradual loss of hope that slip sliding away as Paul Simon put it in the 70s. And then you have the problem much lower down, because of most of the job creation in a whole range of advanced economies. I mean, some have avoided this, like Singapore and Sweden and a few other countries, but most of the job creation has been in relatively insecure service sector jobs, low skill, lower productivity, and more insecure jobs. And that's a major new problem that we didn't have 20 or 30 years ago. And coupled with that is a loss of a sense that you can actually move up in the old way. In other words, if you start off from the bottom, you actually have a chance of a middle-class life, and there was a pathway. And I think that that hope and that set of aspirations is now also diminished. So we've got those two things at the same time, and they're slow burn problems. One that presents itself to the middle class, and the second, which is that those who are lower down no longer have that hope and that sense that they can actually make it, and there's a very clear pathway to make it to a middle-class life. So when we address the problems of COVID, we can do it in a way that also addresses these longer, slower burn problems. And I think that two major interventions, when you think of government, and frankly, when you think of the private sector as well, revolve firstly around that intersection of learning and work, getting a spiral back in the system, a spiral of learning, skills accumulation, job progression, career stability. And there's a whole set of issues that I'm happy to talk about later that have to come with a new way we've got to think about learning and work, that go back to educational institutions, that go to industry norms and certification, competency-based certification of skills, a whole set of issues to do with public funding. How do you actually fund lifelong learning? How do you make it convenient, time and place for blue-collar workers? How do you accumulate human capital, not just for the professionals and the ones who already have it, but human capital for the ordinary worker? How do we think in LinkedIn terms about ordinary workers, blue-collar workers? And second, we've got to think a lot harder about public goods, investment in public goods. In other words, not just the traditional solutions to inequality, which involve one form or another of redistribution. You're going to need redistribution, but that isn't going to change the game fundamentally. We need a new era of investment in public goods. Educate everything from basic science R&D to training infrastructures, even frankly, to thinking about just investments in infrastructure, because that's going to create jobs, that's going to create opportunities. So refocusing budgets, refocusing fiscal policy on investment in public goods to broaden opportunities, to broaden job growth, and to create that sense of optimism that unites people. I think that's the second major priority.
Well, you have just basically done my job and set up the entire rest of the panel, so thank you for that, Tharman. It was interesting speaking with each of you and your teams leading up to this. Education is clearly a focal point for each of you, so I want to start there. Jenny, tell us about new-collar workers. This is something you've spent a lot of time on. How do we think about them differently, and how do we educate them differently?
Well, I would like to just commend the minister as well as he set this up, because this is something we got involved in about a decade ago, and it was for the reason that you could begin to see the digital economy would not be inclusive. There would be far too many have-nots versus haves, and this would revolve around having the right skill to work in a new job and have it quick enough. And so, as you see with COVID, and then with all the issues around racism and systemic racism that have evolved, this has just escalated this issue that was, as the minister said, on a slow burn. So what we set out and coined a term new collar, so it would have a positive connotation. We said we had to offer a new pathway for people into our company, not just a traditional four-year degree. And so new collar was meant to be, you could start, it wasn't white collar, it wasn't blue collar, in those connotations with it. It would be about a new collar job so that you could start without a four-year degree. And there are many new jobs that live at this intersection with technology, cloud computing, cyber skills, that you could get started. And what you'd have to believe as an employer is in three different paradigms. And I think in some ways, Jason, this would be my definition of a new social contract. One would be I would have to hire based on skills first versus degrees only, meaning I'd hire you because you had some skills that you had built in some way. The second paradigm is I'd have to offer a new pathway. The minister used that word as well. So in other words, perhaps you've come from a 6-year high school, which is what hopefully we'll talk about. We got very involved around the world in this. And then the third paradigm would be as an employer, I offer you employability. While I may not guarantee you employment, I can offer you employability, meaning the ability to constantly build the skills that you can have a very good job. Because the issue here is going to become quality jobs, not just any type of job. So that led us down a path of what is a public-private partnership with high schools and community colleges around the world to build and say, how fast could we go to underserved communities and pull people into the middle class for the first time? And we now have a pipeline of almost 200,000 students coming through.
It's so interesting to think about that and to think about it from the perspective of a company like IBM, and then to shift immediately, as I'm about to do, to a company like McDonald's, tens of thousands, hundreds of thousands of workers around the world. And Chris, you and I were talking before we came on. We all know McDonald's. We know a Travis Scott collaboration. We know your new pastry line. I was talking to you about that from a personal perspective. But we often don't think about what a massive employer you are, and also the types of employees, which I think is really important. And I wonder what you have thought about over this past year and what this inflection point means for you, especially in terms of looking at the types of people who ultimately work at your franchises.
Yeah, thank you, Jason. It is an area we think a lot about. Just to put it in context, McDonald's is the second largest private employer in the world. Our system, we employ about 2 million people. And I think Tharman touched on it. We are in the heart of the service sector. The service industry is critical overall globally. I think about half of jobs are in the service sector. 80% of jobs in the U.S. are in the service sector. So it's an area for us that is mission critical. I think, the premise of our company was built on how do we figure out pathways for people within the system to become potentially either restaurant managers, franchisees, company employees. And so we have a number of people who have progressed through their career that way. But most people that come in through McDonald's, and I would say that they typically start under age 25, and then they go on to do something else. And we have about 500,000 former crew that are now teachers. We have about 125,000 now that are nurses. We have about 2.5 million that started their own business. And we've found that it's not one solution that we need to offer. We need to offer a range of different things, everything from English under the arches, life training, life skills. We have a significant number of crew that are unbanked. So how do we provide people with just, some of the basic sort of financial understanding and capabilities? So I think those have been things we've been working on for a while. With the pandemic, to your question, we've had to spend a lot more time, frankly, thinking about the public safety element of it, and how do we keep our crew safe through all of this? And I think that's become that's sort of an evolving area of consciousness that I think all employers are thinking about. It's not just about providing good opportunities, good wages, but there's now, I think, a much higher level of appreciation and understanding on the safety component. And we have, I think, like everybody, learned through this because we were initially not set up to think about, running our businesses from an almost a public safety standpoint. And so things like PPE and transmission rates and R0 and all those things, we're now having to deal with those, which is why we've done a partnership with the Mayo Clinic because, we view that as going to be something we're going to have to be dealing with and thinking about for the foreseeable future.
And so, Steve, I want to turn to you because you see the landscape from a number of different perspectives obviously, as the chairman of a global investment firm, as someone who is counseling world leaders all the time, from an economic and from a market perspective, one of the ways that we're seeing inequality for workers and others really manifest is in what people are increasingly calling the K-shaped recovery. We have seen the market do very well amid a very troubled world. What do we need to do to solve for that?
Well, I think, Jason, there are a number of things on the table that Tharman basically set. And there are two or three things I'd like to address. First, in terms of education, which is the key. I was in China about 2 years ago talking with a senior person there who said they were going to be delivering computer science education to 100% of their population. As we go more and more digital in the United States, we probably, in our large public high school, public systems, probably have around 5% of the people learning computer science. Not everybody in China is going to be a computer scientist, but they're going to be exposed. We have to upgrade our education system to be competitive on a global basis. On a broader basis, and some of the issues that Ginny was mentioning, I've said to you before that we need a Marshall Plan for the middle class. We need to make sure there's enough income for people, and the $15 minimum wage adjusted for different parts of the country, implemented over different time periods, perhaps, is sort of something that gives more of a living wage and also pushes up compensation, not just for those people, but for the people above them that are probably hit 30% of the workforce. And education, for me, is the key. Education is the passport for a better life. And to do that, we need to have great teachers. We also need to look at different ways of educating, as Jenny mentioned. But in terms of teaching, we've all had great teachers, and they make a difference in our lives. And I think what we ought to do is have teachers be the only group of workers in the United States, if you will, who don't have to pay tax. And the reason I suggest that is it will mark them apart from all other types of employment as a valued class. It'll also increase their after-tax compensation significantly, so we can attract more of the best and the brightest to help us move in that direction. And we also need to help our population around the world. We need the business community deeply engaged in the school systems to provide apprenticeships and other types of ways where, as Ginny mentioned, not everybody has to have advanced degrees, but if they're linked into the business community, they'll have a place to go to work. They won't be lost. They'll be taught increasing levels of skills. And if you start putting these things together, you're going to really start to be able to make a dent in some of the pessimism that I think was described that regular people sometimes feel in the changing workforce that we're all living in.
Right. So, Jenny, let's talk about that, because I'm fascinated by this program that you have, PTech, I believe that it's called, that as I read it, essentially says from a high school, from a secondary school perspective, we're kind of doing it wrong. I mean, this is a really, I would say, and correct me if I'm wrong, somewhat radical approach that, if widely implemented, could really change the way we think about education, not just from a college level, but going even earlier than that. Tell us a little bit about why this could work, or why it does work.
Well, it does work, actually. And in fact, the very first school we started was in Brooklyn, and it was when Mike was mayor, actually, Mike Bloomberg. And it was just a bit of an experiment there. but now
a set of executives in a very, very changed world, from the service sector of McDonald's to the technical cloud challenges of international business machines, and over to Mr. Schwartzman's efforts in finance, we'll say, the challenges of the pandemic, that at our New Economy Forum, and we thank you for staying through that. We've got much more coming up through the morning, and part of it is the lift in the markets off the vaccine news from Moderna. Ebbed back a little bit. Dow was up 520 points. Now we're up only 430 points, still a 1.5% move. We've got much more coming up. Jonathan Farrow drives forward the conversation on TV. Paul Sweeney drives forward the conversation on radio. I don't know who I'm joining. Am I joining Farrow or Sweeney? I don't know.
Both.
Lisa, let me know
Zoom.
at some point.
That's
it's
what
a
Zoom's
gloomy
for.
day in London. This is Bloomberg. Good morning.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the opening bell starts right now with 30 minutes until that open. Equity futures advancing, the rotation is back, and that's where we begin with the big issue. Vaccine optimism paving the way for record highs.
The vaccine news, the market is close to a high now.
Infections are rising globally.
The virus continues to surge.
Markets try to look through that.
We've had this sort of double catalyst. Markets are still going higher.
Market participants are anticipating the likelihood of a vaccine.
The vaccine will come.
The vaccine is really the game changer here.
That's the perspective you should have.
Let's bring in Bloomberg's Kelly Lyons and Sarah Ponczek for more, shall we? Kelly, let's start with you. We've got to start with the vaccine news. Pfizer last week, Moderna this morning.
Yep, good news this morning from Moderna, John, but we also have to couple the good news with the bad news. The U.S. surpassing 11 million COVID-19 cases yesterday after increasing by 1 million in just a single week. That is a growth rate of about 11%, and the death toll is now approaching 250,000. As a result, you're seeing states across the country moving toward more restrictive measures. Just this morning, New Jersey lowering gathering limits for both indoors and outdoors, and over in Michigan, the governor imposing a temporary partial 3-week lockdown starting Wednesday that will see high schools temporarily closed, as well as indoor dining and other things shut down. But there is good news, as you alluded to this morning, John, and that comes from Moderna, their vaccine candidate proving highly effective in preliminary analysis of a late-stage trial involving 30,000 people. It prevented infections in nearly all of those 30,000 people, an efficacy rate of 94.5%. And the other notable thing from Moderna this morning, John, is a longer shelf life of about 30 days for that vaccine. Again, those are just preliminary results. We expect the final data toward the end of this month, but both Moderna and Pfizer, which, as you said, did also post positive results last week, are expected to seek emergency use authorization from the FDA if further study proves the vaccines are safe. Now, as far as who could ultimately get those vaccines, John, well, the U.S. does have agreements with both companies to receive tens of millions of those doses, as well as the U.K., Japan, and the EU, but it is a relatively small group of countries, that will have access to these shots, John.
Kelly, great work as always. Thank you. That's the positive news. It feeds into a market that once again has a little lease of life on the cyclical rotation we talked about all last week. Equity futures advanced on the S&P. On the Nasdaq, we fade away. On the Russell, to the moon. Sarah Ponczek has more. Hey, Sarah.
Hey, John, we need a new moniker, not just Merger Monday, but now Vaccine News Monday. Last week, Pfizer, this morning, Moderna. And as you said, it's inspiring rotation part 2. First, if we look at Moderna shares, though, as of last Friday, already up more than 350%. Well, this morning, we have a new record for Moderna. If we look at shares currently up close to 14% in pre-market trading. But if we look at equity futures, what are we looking at? Rotation part 2. That's the one. Like you said, Russell 2000 to the moon. No, we're not seeing the same move as last Monday. Last Monday, we saw Russell 2000 futures 7% limit up, but still a very strong boost. Meanwhile, we see the Nasdaq 100 turn negative. The Nasdaq 100 is in the red. But as you're looking at here, safe havens, though, are in the red, too. Investors moving out of safe havens. Very notable, though, if you look at 10-year Treasury yields, only at 90 basis points or so. Not anywhere near to the 97 basis points that we did reach last Monday throughout the week last week. So we're not seeing as much of a bid head out of the bond market. Crude, though, at the highest in September at 41.93. But if we switch up the board and now take a look at equity futures, that rotation that I was talking about, the Russell in the green, the NASDAQ in the red, as you see it there, reminiscent of what we saw just last week. We also see a very large bid to the Dow, too, up more than 1.5%. So the question is, last week, the question was, is the rotation here to stay? Well, as we see the new Moderna news, at least it's inspiring another run at the rotation yet again, John.
Sarah, thank you. Awesome, as always. So we've got 26 minutes into the opening bell. We've got the Russell outperforming. Feels familiar. We saw this last week. Moving the bond market just does not stack up. As Sarah pointed out, 97 basis points, top end of the range last Wednesday. We don't get near it. We don't unwind the move in treasuries. Treasury yields up, they roll over, then they barely budge off the back of positive news from Moderna. So that's the bond market story. Do you need the bond market move to confirm the rotation in equities, specifically that long on banks? We can talk about that around the opening bell. Futures higher, small caps outperform. Morgan Stanley recommending overweight positions in both equities and credit. They write the following: we expect a broad-based recovery to take hold from March and April onwards. Driving the synchronous recovery will be a more expansive reopening of economies and the extraordinary monetary and fiscal policy support that will be kept in place. Here's the line from them over the weekend: keep the faith, trust the recovery. Joining us now is PIMCO's Erin Brown. Erin, do you keep the faith and trust the recovery?
Yeah, I think that's right. I mean, if you think back, we've now recovered a fairly significant amount in terms of the economic data. Personal income's up since the pre-pandemic levels. We've seen an extraordinary amount of monetary and fiscal policy be pumped into the system, and we have an end goal in sight with news of the vaccine. And so I think going into 2021, the outlook is actually pretty optimistic. We still think that monetary policy is going to remain very easy, and on the back of that, with an enormous amount of fiscal stimulus, tailwind behind us and news of the vaccine, we actually think that the outlook for 2020 is pretty bright.
Keep the faith, trust the recovery. That was Morgan Stanley. Last week it was Goldman Sachs, roaring 20s. I think JP Morgan in there with Market Nirvana as well. In 6 days, Erin, we had 1 million COVID-19 cases in the United States. 6 days, 1 million cases. Over the weekend, the governor of Michigan, the governor of Washington introduced more restrictions as well. I understand that you can have a situation where the market price is in a better future as we live through the brutal reality of winter, but is there anything that could happen in the next 2-3 months that you think would test the patience of a market loading up on risk again?
Yeah, I think that the biggest risk right now certainly is the pickup in COVID cases, and we certainly saw in early fall the impact that the rise in cases in Europe had to European equity markets, which sold off in excess of 10%. And so certainly we could see a replay of that in the U.S. as well. That said, when we had that sell-off in Europe, we didn't have news of the vaccine, with 2 companies now looking to seek emergency use authorizations in the near future. And in addition to that, we now have a level of uncertainty behind us, having moved past the election. So certainly I do think that the next couple of months are going to be bumpy until we get to that point where vaccine use is widely available. But I think that that the downside is somewhat limited, given the fact that we do have fiscal authorities stand willing and able to spend more to do another fiscal stimulus bill if necessary. Not just here in the U.S., but even more globally. I think that the willingness to do more fiscal certainly stands ready and able. And so I think that that does provide a level of insulation for the amount of downside we could see in the market.
So, Erin, consensus view seems to be stay long equity risk and stay long credit risk as well. Where there's a debate is where you go for those long positions. The pockets of risk you take in the United States, which sectors, what style, and internationally, do you start to pivot towards Europe? So talk to me about the rotation, where you see things, but be specific if you can, where you're looking to go.
Sure. So I do think that you are going to start to see a rotation into more reflationary sectors. But I think you want to be gradual in the way that you start to approach this. You don't want to go all in, starting to buy, deep cyclical energy companies and sort of impaired financial companies. I think you want to still look for quality investments that are still cyclically oriented. So we like the semiconductors, we like industrials, we like materials, more the manufacturing oriented cyclical plays, rather than sort of the deep cyclical consumer-oriented plays, which are still going to be hindered until we start to see wide-scale vaccines. In credit, we like mortgage credit, MBS, as well as structured credit, more than corporate credit, which has rallied fairly significantly, since the over the last 6 months, and we think still remains vulnerable to hiccups in the global economy over the next couple of months. So really getting longer cyclicals, but really focusing those cyclicals more on the manufacturing-oriented cyclicals rather than the consumer-oriented cyclicals, which will really be the third step of the economic recovery. And I think you'll really start to see a outperformance of more of the leisure, the entertainment, the cruise lines, and the lodging names once we see firm news of a vaccine, and that's probably going to be early in the first quarter of 2021.
Erin, even with the better news on the vaccine, do you need rates to participate? Do you need treasuries to play ball here? This morning, they're not really.
So I think that Treasury's not playing ball is actually a bullish sign for equities. If you see too steep of a sell-off in rates, I think that could scare markets. The fact that rates are remaining well contained, I really think is a function of the fact that the Fed is still quite accommodative and is likely to remain accommodated over the cyclical horizon. And so I think that as long as you see rates remaining contained, equities continue to do well. If you start to see a really rapid sell-off in rates, that could potentially scare equity market investors.
Thurman was mentioning the use of
Erin,
AI.
great to catch up. The wonderful Erin Brown of PIMCO. Thank you. Started that conversation with a conversation about Morgan Stanley call. Year-end 2021, 3,900. On the bond market, on a 10-year, they're looking for 145 on a 10-year yield. Way off that level. On the equity market, we're getting there. 12 months out. 12 months and change, we're close to their year-end call for 2021. But for the bond market, I think that's the question. Erin answered it. In her point of view, from her perspective, if we had a big move in 10-year yields, it would disrupt the move into risk. But there are some of you I know that think you need to see that complementary move in rates. Higher yields, steeper curves to support the rotation into the financials. Incidentally, Morgan Stanley also looking for a 4% move in a weaker dollar through next year as well. And looking at euro-dollar, 118.31. We're not getting that.
The students are minorities, and 70% are at the poverty line and below. We graduate 98% of those students, and 96% of them go to higher education. And they're the same students that are having difficulties other places. And I think there are all kinds of techniques that we can use so that people have a much better shot. That our society becomes much more able to fulfill the dreams and the expectations and obligations we all have to provide a good life for everyone.
So, Chris, on the subject of the wealth gap, it's something that has come to the fore largely very passionately on the part of one of your board members, John Rogers of Ariel Investments, and in part because of what he has seen at McDonald's in many ways, and the wealth gap that has, again, I think, come to the fore over the past year when it comes to whites and blacks in America in many ways. How do you go about solving that? How do you use McDonald's as a way? And I think you've traditionally done this. How do you accelerate that in this world?
Well, you're right. John's been a passionate advocate on this. This is he describes it as his life work. And I think one of the things that John focuses on, which is where McDonald's can come into play, is there are so many communities where there's just a dearth of economic activity. There's not employers, there's not manufacturing in that. Maybe the infrastructure, the school system isn't as strong as you'd hope it would be. And so for McDonald's, and I think also John's view and philosophy, is that you've got to be able to find businesses that can go into these communities and get people beginning on this pathway. So with a McDonald's, someone comes in and works in our restaurant, they're starting to learn life skills. Now, what Ginny was talking about, they're also seeing role models. So they're meeting a franchisee who can talk about, their journey, can talk about how they've become successful. And I think, so it's the other thing Jenny talked about, which is, people's pathway shouldn't be determined by zip code. And yet, if all you know is your zip code and your worldview is informed just by your zip code, you've got to find ways to bring institutions into those zip codes to then start to create this level of awareness, to start creating these life skills and these opportunities to other things. So I think that's for us where we view, we have an obligation as McDonald's. We are in those communities. It's kind of the premise of our company. How do we be part of that solution and giving people sort of that look as what does the world hold beyond maybe the south side of Chicago or Compton in LA or other places like that.
So, Steve, I want to bring you back in because we got an interesting question from the audience, and I'll just read it out. The global market in goods made with low-skilled labor has arguably hurt blue-collar workers in the U.S. and helped drive inequality, hence the bipartisan shift toward protectionism. Is there a realistic alternative? And I ask you that in part because of the way I set you up earlier. You talk to world leaders all the time, and I do wonder, as we move into 2021, do you think we will have a different conversation, one that is not as protectionist and encourages more global trade?
Well, I think there's no doubt there's going to be a trend to reshoring, and that'll come in industries that have critical sort of national security elements, and that could be in the medicine areas, pharmaceuticals, PPE, and all kinds of other things. I think there are regional trade arrangements. One was announced today in Asia. We have USMCA and other areas which will be encouraging more domestic content, but also continuing to have an international component. I think global trade is here to stay. It in effect is part of the fabric of society. There are certain components that work well for everyone. There are some actually that don't work so well. And I think each society now is going through some rebalancing, if you will, internally, politically, to try and figure out what works. Global growth correlates really, really well with international trade. I don't think we're going into a world of deep protectionism going forward. I see more regionalism.
And so, Jenny, as we wrap up here, I mean, I do sort of think about your perspective, sort of wrapping up where we started, which is with education. As you think about leaders out there, whether they're in the public or the private sector, having devoted so much time to this issue of education and training, what's the thing we need to do now? What is a legitimate goal for 2021 that a business leader can have to really move the ball forward here?
Well, I do believe, and I share the optimism of everyone on this panel. And just as you heard Chris talk about what McDonald's is doing, every one of us can take a very positive, proactive, public-private partnership approach to this. And I do believe it starts just as simple as if you open up your job requirements to hire for skill first. It is a pragmatic step. And in fact, as you spoke about the Black community, there's a group of us working on a coalition to bring 1 million Black employees into the middle class for the first time. This will happen because we open up our hiring and we hire for someone's aptitude to learn versus just their hard skills. So the number one thing would be a skills first approach, followed by just opening some new pathways. That is so pragmatic, Jason, but it actually is what will make a difference. This problem will not be solved in the time frames that technology is moving fast enough if we all don't join together. This is not, as the minister said, as Thurman said, this is not just about a government challenge. So for employers, skills first and new pathways. And by the way, for the government, if I may make a suggestion, and this is true in many countries around the world, it is universal broadband access because people can't learn or do some jobs without that, as well as changing how they do higher education funding. You should not have to qualify for a 4-year program in order to get financial aid. In the United States, the Higher Education Act could be modified so that you could get credentials, not just be a full-time student. You could provide for your family and then get funding to go back for whether it's a vocational program, a credential program, et cetera. So there are, in my mind, some very urgent things that could be done now that would have an immediate return.
Tharman, we've only got about a minute and a half left. We are going to be in a different world politically. We already are in many ways. Globally, what's your advice to world leaders who you are talking to in order to seize this moment?
Well, I think there's ample opportunity to tackle the long term and the short term at the same time, to tackle the problems of the middle class and those lower down at the same time. And that opportunity is one of investing and reinvesting in education and lifelong learning, investing in infrastructure, which is in great need of reinvestment, even in the advanced world, investing, as Jeannie was just saying, in universal broadband, and I would say cheap broadband as well, including in the areas well outside of metropolitan cities. If you look at the United States, for instance, there are significant parts of the country which don't have broadband. That's true for most large countries. So investing in things that everyone can see opportunity in for themselves and their families also tends to bring people together because they have a feeling that, look, the government's doing something for all of us. And I think it creates a more optimistic mood. It's far better than talking about UBI and sort of passive strategies. Let's talk about how we can do things to develop capabilities, develop hope and aspirations. If we lose that game in 20 or 30 years' time, we can start talking about UBI, but we haven't gotten started.
All right. Well, we're going to leave it there. My thanks to all of you, Tharman, Jenny, Chris, Steve. A great way to kick it off. A little bit of optimism here to start the New Economy Forum. Thank you so much.
All right, a great conversation. Jason, thank you. Well, the coronavirus will forever change the global order to interpret a new era that is emerging from the lockdowns. We welcome Dr. Henry Kissinger, the former U.S. Secretary of State and the honorary chair of the Bloomberg New Economy Forum. Dr. Kissinger will be in conversation with John Micklethwaite, Bloomberg editor-in-chief.
Henry Kissinger, thank you very much for coming to us again at Bloomberg and the New Economy Forum. In one of the discussions that you and I both attended about what this group should concentrate on, one esteemed American talked about an aspiration being that this gathering should be like the Congress of Vienna, which is the famous coming together of leaders that produced a century of peace in Europe in 1815. Now, the very first book you wrote was called A World Restored. And it was about that Congress of Vienna. And I wondered, what are the necessary conditions now for a lasting peace between America and China? And in particular, what does Joe Biden, the president presumed, if we can call him that, what does he need to do?
I would think we need, first of all, a dialogue with the Chinese leadership in which we are defining what we are attempting to prevent, and in which the two leaders agree that whatever other conflicts they have, they will not resort to military conflict, and that they will create an institutional system by which some leader that our president trusts and some Chinese leader that President Xi trusts are designated to remain in contact with each other on behalf of their presidents. And that after having discussed the issues to avoid, we can move towards issues we should achieve. United States and China have never faced countries of a magnitude that is roughly equal with the other. This is the first experience, and we must avoid it turning into conflict and hopefully lead to some cooperative endeavors.
Last year, you described at this conference, you talked about us being in the foothills of a Cold War. Do you currently see that we're further up that mountain?
I think we're in the mountain passes now, and it's a progress that should not continue.
When you talked a bit about what the Americans should do, on the Chinese side, do you think there are particular things that China can and should do more than it's doing already?
There are differences on the issue of human rights, and it is important for each side to understand the sensitivities of the other, and not necessarily to solve the problem, but to alleviate it to a point where further progress is possible. One of the basic historic issues is that Americans deal with foreign policy as a largely pragmatic issue of a series of specific problems. Chinese deal with foreign policy primarily as a view of historical evolution. So when the American and the Chinese president meet, they're not necessarily talking about the same subject. And we have to